Hi guys, welcome back. We are moving on to the next chapter. We are starting with audit report. In audit report, there's not much from written notes. You'll read from main book because it's a complete format chapter. And it comes in exam too. It comes. Okay. You will find audit report chapter in front of correct and correct. You'll find some in MCQ. Do you understand? For sure you'll find it in the MCQ. Okay. There are 4 essay that's covered in this. 4 standards of auditing is covered. SA 700, 701, 705 and 706. First, I will start teaching 700 and 705 because both of it goes hand in hand. 706 and 701 are completely different. First thing it says, forming an opinion. What is it? Forming an opinion and reporting on FS. What it means. Forming an opinion and reporting on financial statements. SA 700 is forming opinion and reporting on FS. Look here. Name of this essay is forming an opinion and reporting on FS. See it on screen? Forming an opinion. There are 2 types of opinions. One is unmodified, another is modified. There was a typing error by the students here. I'll show how they wrote it. I hope you'll understand this though. They've written it. Basically, there are 2 types of opinions, unmodified and modified. One is unmodified and another is modified. What does unmodified means in simple language? It means clean, unqualified. And what does modified mean? It means qualified, adverse, disclaimer. What is it? Qualified, adverse, disclaimer, in simple words, any opinion. Any opinion other than a clean opinion. Any opinion other than a clean opinion. So, other than clean, we have qualified, adverse and disclaimer. What are the 4 different types of opinions? Can you see it? It's clean. This face is messed up, so much mess on his face, so much pain, it's adverse. Students, there is some discomfort on his face. It's in between, neither clean nor adverse, it's in middle. It's qualified. What's this man doing? He can't do anything, he's lazy. So he's chill, he can't do anything. And since he cannot do anything, he uses do. When you can't do anything, you do. Now what does do mean? Do, DOO means disclaimer of opinions. So clean, qualified, adverse, disclaimer, these are your opinion. Okay? Now, what and how to study, I've mapped everything. You only need to study that much. Refer question 4, 5, 6 on page 150 from main book. Refer title, Adverse Auditor's Opinion, Basis of Opinion at page 151. Now listen carefully. We will discuss when the qualifying, adverse and disclaimer will be required. We will see. You need to understand what does SA 700 say. Forming an opinion and reporting on financial statement, they are of 2 kinds, unmodified, which is clean, or unqualified opinion. Modified means it's not clean, it's qualified, adverse or disclaimer. Okay, now, when will we give a qualified opinion? So I'll explain from here and later we can read from book. We'll make you mark that too. What does modify mean? In simple language or in layman's language, modify means to change or to alter, as you guys have said earlier also. In SA's language, what modifying means, it means you're giving either qualified or adverse or disclaimer. When you give qualified, when do you give adverse, when do you give disclaimer? Depends on 2 situations. First, if FS is mistaken. And now, where the topic of modification is written, it's written in SA 705. What is it? It is written here, modification to the opinion in the independent auditor's report. It's in SA 705. What we'll be discussing under this SA 705? It can modify in 2 ways. First, FS is misstated. You tell me. FS is misstated. Did you see the FS? Yes or no? Yes? FS is misstated. Misstated means what? It is wrong. If FS is wrong, then which opinion is left out? If FS is wrong, which opinion is removed? And qualified adverse disclaimer is removed. Okay, I saw it, right? So the disclaimer is also removed. We put a disclaimer when we're unable to see it, when that happens. For example, income tax department took BUA. The department took BUA, books of accounts. You can't see it. If you don't see anything, you can't say it's clean, you can't say it's adverse, you can't say it's qualified. You can't see it, then what happens? Disclaimers removed. I saw it, but it's wrong, so clean is removed. Now to our left, what are they? Qualified, adverse. Two remains which are qualified and adverse. I saw. FS is wrong. Very wrong. My God. Believe me, when I say this, when I see FS, I found out that it was wrong. It was so wrong. Like the company didn't do the CFS. The holding or subsidiary company, they did not do the CFS. It's wrong. It's important material. Material means important. It's pervasive, because what will happen? My share capital will be wrong. My assets will be wrong, investment will be wrong, data will be wrong, results will be wrong, everything will be wrong. It's not small issue, it's a big issue. It is a big difficulty. Very difficult. If there is a lot of difficulty. So what opinion will we give? Adverse opinion. What kind of opinion will we give? Adverse opinion. So many issue means adverse opinion. If your guts tell you that there are so many issues, then you should know the answer is adverse opinion. The company's stock or the cost or an RV, whichever is less, had to take as value. But they have valued it at cost, on the cost among all. The valued on cost didn't look at NRV. Is the stock incorrect? Is it important? Stock value is incorrect. Is it important? Yes. Is it significant? Yes. Is it material? Yes, it is material. Wait, you asked about stock. Is your asset correct? Tell me. Is asset figure correct? Assets mean fixed assets, not current assets. Yes. Is investment correct? Yes. Is cash bank correct? Yes. Is creditor correct? Yes. Reserve is correct. Everything's right. The only problem is in the stock figures here. The problem is in the stock figures, okay? So it's material, but it's not pervasive. It is material, but it is not pervasive. Material, but not pervasive. Pervasive means an universal application, and it is seen everywhere, okay? If it is material and pervasive, then it is a big trouble. Material, but not pervasive, no problem. So which opinion will it be? Qualified. Students, it will be qualified. Okay? Here. Auditor is unable to obtain the side. Let's say that I went to the client and the client says the books are missing, income tax department took it. Or the give reasons that books of accounts have burned down. But has the client seen books of accounts? Is it pervasive? Nothing has been noticed. Okay. Are there some trouble or are there big troubles? Little or big trouble, nothing was seen here. Very difficult. Is the BOA strong? No. I mean clean. If it's trash, then adverse. No. If it's in the middle, so qualified? No. So when you haven't even seen the BOA, when you cannot do, what will you do? DOO. When you cannot do, then what do? You do DOO. What does it mean? What is DOO? It means disclaimer of opinion. Okay? Second, I went to the client's place and he has bought only 10 machines. And he only gave me bill of 6 machines, leaving 4 out. Bills weren't given. Unable to obtain size, sufficient, appropriate, and development. 4 bills weren't given. 4 bills were not given. So is it important? Bought 10 machine, received bills only for 6. Is it important? Yes, it is. It's material. Is it small difficulty or big difficulty? Some difficulty. Everything else was given to check, like investment, share capital, and more. Only 4 bills weren't given. So it's material but not pervasive. So which opinion is it, students? Qualified. Which opinion will we give? Qualified. Do you understand? So modification occurs due to 2 reasons. It is very important. Out of 2, you will definitely get 1 question for 2 marks, no matter what. If FS is misstated, it's material and pervasive, it's adverse. If it's material but not pervasive, it's qualified. Unable to obtain essay, material and pervasive, then DO. If material not pervasive, then qualified. Definitions ready. If it comes in exam for 2 marks, adverse opinion. If FS are misstated and the effects material and pervasive, the auditor will give adverse opinion. What's disclaimer's definition? If auditors unable to obtain essay and it's material and pervasive, then it's disclaimer of opinion. What's the definition of qualified? If effects are misstated and if auditors unable to obtain essay, in both cases if it's material and pervasive, then it is qualified opinion. That's answer. Nothing's new here. You just have to remember this chart, okay? You should remember this. Let's understand the chart again. Then we'll read from book, I'll tell you. Because this chart will come in MCQs for 1 or 2 marks. If you have any doubt, ask me. 700 is named forming an opinion on reporting on financial statements. 705 is called modification to the opinion in the independent auditor's report. Read and tell me. Done? Okay, take out your book. And then go to page number 150. Okay, so whatever I ask you to mark, just read only that much. Look here. So, first essay in audit report chapter is forming an opinion and reporting on financial statements. Cut the first question off, it's not important. Mark this number 1. Okay? Every objective question that appears in an essay is very important and you must know the answers. So, what does this essay say? The objective of an auditor is to form an opinion on the financial statements based on an evaluation of the conclusions drawn from the audit evidence obtained. To express an opinion clearly through a written report, which means to give opinion by reporting it. So this is objective, okay? You'll get questions worth 1, 2, 3 or 4 marks. There's a 700-word essay about forming an opinion. You'll get questions like form an opinion on the financial statements based on the conclusions drawn from the audit evidence obtained. To express clearly that the opinion is obtained through a written report. Okay? And now, cut third question. Make it question number 2. One besides this. Make it second. When will the auditor express unmodified opinion? Unmodified means unqualified or clean opinion. Unmodified means when opinion expressed by the auditor, he concludes that the FS are prepared in all material respects as per applicable FRF, and here what FRF means, Financial Reporting Framework. So you followed AS, which means you followed Schedule 3. Right? What is this? This is unmodified. Everything is in order. There are no problems. Means everything is neat and clean, perfect. Unmodified opinion. Will modify. 3 opinion types: qualified, adverse and disclaimer. We have 2 situations. FS are misstated. Unable to obtain silence, this is the base. FS are mistaken and unable to obtain silence. If auditor concludes that based on evidence obtained, financial statements are not free from material misstatements. Aren't free from material misstatement means financial statements are misstated or auditor is unable to obtain sufficient SI. Is that clear, students? When the auditor is unable to obtain sufficient SI, auditor will modify opinion as per SS 705. Those are the 2 reasons. Okay? Can you see? We all know to auditor's report. Cut it all. Cut it. Okay. Now, what are the basic elements of the audit report? Write it down. It's important. Number 4. Now, what are the basic elements? Here. So you must have seen how audit report is formed. You must have seen it in an articleship that the audit report is always prepared on SEA form letterhead, so your ABNCO is there. Whom do we address? We address the members, because students who appoints us. Members. 2 members of Reliance Industries Limited. So the first heading is title. Independent auditor's report, it's already written. You don't have to. Whom do we address? We address the members. You will find it further. What comes next is the auditor's opinion. And after auditor's opinion, what comes next? It's basis of opinion. What comes below it? It is going concern. Now, what is it? Going concern. Then comes key audit matter. Is that clear, students? Okay. Near key audit matter. As I've made this arrow. One from below, another from above. It is EOM or OM. We'll do the same in paragraph 706. EOM or OM. It can be also applied both above and below the CAM here. Above and below the CAM. Now what is CAM? So it is key audit matter. Okay. Clear? Then next comes MAU. What's MAU? Management responsibility. Auditor's responsibility, other reporting responsibility. MAU, management responsibility, auditor responsibility, other reporting responsibilities. Then date, place, sign. Is that clear? What is this? What are the basic elements of an auditor's report? So there is a title, an address and an opinion. Okay. What's below opinion? This is basis of the opinion. Then comes going concern, then we talk about CAM. And then you can add EOM or OM above or below CAM. We can add OM in the back. I'll teach you that when we'll discuss. Then management responsibility, auditor responsibility, other reporting responsibilities. Then comes date, place and finally signature. And done. Okay, clear? It's our elements. I'll tell you what to study from this. Come to the title. So what will be my title? Click on it. The audit report shall have a clear title, clearly stating. That means it indicates a report of the independent auditor, an independent auditor's report. Okay? Then tick the addressee. Generally, whom do we address? We address shareholders of the company, either shareholders or the TCWG. But we always address the shareholders, I mean members. Okay. Now, can you see auditor's opinion? Make it point number 5. Write their contents of auditor's opinion para. As you can see it on the screen, okay? Got it? What will we do in it? Box these 5 arrows you see here on screen. Put it in a box. That's your answer. First section of report shall include auditor's opinion and have heading as opinion. Okay, students. If it's a clean opinion, you can write opinion. You can write clean. You can write unqualified. You can write unmodified. If you have written it as opinion, it's okay. But if your opinion is qualified, then it's a qualified opinion. If it's adverse, then you write the heading as adverse opinion. If it's disclaimer, then you should write disclaimer opinion. Accordingly, you need to change the opinion. It's nothing like inter-level exam. There are minor changes. What will be included in the opinion section? If you've seen audit reports, they say, we, the auditors, have audited the accompanying financial statements of Reliance Industries Limited. The company comprising the profit and loss account for the year, balance sheet, statement of affairs, so and so. Remember that? It's the same. Identify the entity. Whose FS is audited? Company's name. State the FS have been audited. Yes, we have audited them. Identify the title of each statement. The title of each statement means PL, balance sheet, cash flow. Refer to the notes and summary of significant accounting policies. The date and the given period here ends on 31st of March. There are 5 things. Okay? Write this as RTP. It is RTP. All the way down. Okay, now in this, you can box these 2 lines that you see. This is how it's done. We say true and fair view of the financial statements, giving a true and fair view. So, we can say that the financial statements are in accordance with the applicable financial reporting framework, or, in our opinion, accompanying financial statements give true and fair view in applicable financial reporting framework. These are different ways of looking at it. So, these are practical but not related to exams. Question number 6. Contents of basis opinion paragraph. What comes under opinion? Basis. If you qualify adverse or disclaimer, then basis and no basis in clean. What to write in this? There are 4 things you need to remember for exam. The basis of opinion should include the statement that the audit was conducted in accordance with SA, meaning we conducted the audit as per SA. Members can look for our responsibility below in the MAO, that is management auditor, others. So all the auditor's responsibilities, you'll find it there. So refer to the section of the report that describes the auditor's responsibility under the SA. You can go there and read it. First, you can see that audit was conducted as per SA. Secondly, to know about our responsibility, you can see that below. Third, include a statement that the auditor is independent of the entity and that the code of ethics has been complied. Write it in your own language. Include a statement that auditor is independent of entity and relevant code of ethics requirements are complied. Fourth, states that auditor believes that evidence he has obtained is sufficient and appropriate. That's right, isn't it? To provide opinion or the basis for the opinion. Did you get it? So there are 4 things to remember. The first, state that the audit was conducted as per SA. Refer to responsibilities of report that describes auditor's responsibility. You will find them below. Third, include a statement that they are independent of entity and have complied it with code of ethics. State that auditor believes evidence has obtained is sufficient and appropriate to provide basis for opinion. Where it's written, contents of basis of opinion para, it's 6th question. The bottom part. Cut it out. Next page, page 152, cut it. Then 153, cut it. Then 154, cut it. Cut 155 also. Come to 156. Cut its above part. I am not cutting because it's crash course. I would have cut it anyway. It is just a format. It is irrelevant. Look at the format of the report. You will get an idea. The first is your title, right? Independent Auditor's Report. Underline that. Then who do we address? Members. Then this is your opinion. How do you say it? There are 5 things. We've finished the audit. What's the company's name? We audited ABC company's financial statements. These are the titles of financial statement, balance sheet as of a certain date, P&L statement. Statements of cash flow, notes including summary of significant accounting policies have been audited, right? Then you can see the paragraph below. In our opinion, the one I made a box with the stars, you see this is very important. Opinion. I will teach you how to form clean opinion para. This has not come in exam yet. No assurance of ICI. They may ask you to write an opinion para in the final level. It's not yet asked at inter level. I'll teach you about clean opinions first. After break, we'll learn about other opinions and how they are formed. See, how's it written? In our opinion, and to the best of our information and according to the explanation given to us, place an arrow there. That's the first part. It's fine if you write this in broken English. I won't have any problem and you will get the marks. But answer should match with 70 to 80% accuracy. Write in broken English, in our opinion to the best of our information according to the expression given to us. The aforesaid financial statement gives the information required by that in the manner so required. Put a bar after required. Here, the aforesaid financial statement gives the information required by that in the manner so required next, and gives a true and fair view in conformity with the accounting principles generally accepted in India. Put a bar. Fourth, of the state affairs of the company. And gives a true and fair view in accordance with the accounting principles generally accepted in India. Fifth, state of affairs as of so and so date. Profit and loss and its cash flows as of that date. That's fifth. There are 5 things. In our opinion and to best of information and according to expectations given to us, the aforesaid FS give the information required in that manner and are also required. True and fair being in conformity with accounting principles generally accepted in about what? State of affairs. P&L, balance sheet, cash flows. This paragraph is important. This is of clean, unmodified and unqualified. Okay, so now in the basics I've taught you 4 things. We have done the audit as per SAS. Okay? If you want to read our responsibility, you will find it in the auditor's responsibility paragraph. Where? In this paragraph. We are independent of the entity. And we have complied with the code of ethics. And whatever evidence we have collected, it's sufficient and appropriate to form a basis for the opinion. That is, form a basis for the opinion. It's done. Cut off the bottom part. It's useless. Cut off this and now at 160. Done. Read this much in SS 700. Okay. Main things would be in 750. For 700 you only need to learn this much. Is it clear? If I ask you how many types of opinions are there in India, what would be your answer? There are 2 types of opinions. Unmodified and modified. The subtypes of modified opinions are qualified, adverse and disclaimer. So 6 questions are formed like this from SS 700, and also remember the opinion paragraph, this one. That's it. So 6 questions plus 1 opinion. Okay, so we finish our SS 700 and let's stop class here. Post break, we will continue with 705, 1 and 6. Okay, let's go. Bye bye. Take care. Aim for rank or 70 plus, whichever is earlier. Hi guys, welcome back to the class, and we have covered our SA audit report chapter where we completed about SS 700. The name of the SS 700 was forming an opinion and reporting on financial statements. Okay, now tell me, how many types of opinions are there in India? Let me revise it quickly for you. 2 types of opinions, what are they? Unmodified and modified. So unmodified means clean. Modified means qualified, adverse and disclaimer. Qualified, adverse, disclaimer. Okay. Now we will discuss SS 705, modification of opinion in the independent auditor's report. Leave 701 for later. We are doing 705 first. Come to page 164. Modifications to the opinion in the independent auditor's report. Look. So the 2 charts that I explained to you, those 2 charts are very, very important. Question is how? Look, one is modification. There are 2 in it. So one is FS or misstated. Other one is unable to obtain PSI, right? Material and pervasive, material but not pervasive. And here, material and pervasive, material but not pervasive. Material and pervasive, it would be adverse. Material but not pervasive, it would be qualified. And pervasive, it would be disclaimer or qualified. This diagram is very, very important. Okay. Now the first question is, what do you mean by modification? When the auditor is not giving an unmodified opinion, it is said that they are modifying the opinion. It's so simple, isn't it? If not giving unmodified opinion, you modify it. There are 3 types. Qualified adverse disclaimer. Mark this. When the auditor decides to modify. When will auditor decide to modify his opinion? There are 2 reasons. The FS are misstated and are unable to obtain sign. The auditor concludes that based on the audit evidence obtained, the financial statements as a whole are not free from material misstatements. The same thing again. And the auditor is unable to obtain sign to conclude that the financial statements as a whole are free from material misstatement. So FS. Unable to obtain sign. If these 2 situations occur, what will the auditor do? The auditor will modify. Question 2, tick. 3. Write there what are the reasons for a modified auditor's report. Write the reasons. We take the modified report based on what? Materiality and pervasiveness. On what? Materiality and pervasiveness. The nature of the matter giving rise to the modification is whether the FS are materially misstated or. In case of inability to obtain psi, it may be materially misstated, so in both of these matters, we materially consider the nature of material. Whether the FS are materially misstated, second, whether the auditor is unable to obtain psi, it may be materially misstated. And also the pervasiveness, check it once. The auditor's judgment about the pervasiveness of the effects or possible effects of the matter on the financial statements. What does pervasiveness mean? It's a universal application. If you want to write, you can write there. Effect should be visible everywhere. Pervasiveness, universal application. Take this one too. 4. When the auditor shall express his qualified opinion, you will read this tick. Because I've already taught you qualification, you must read it. Tick this also. Now, question 5. Mark this important and tick it. When do we give an adverse opinion? Listen. They have provided us an illustration below. And also, illustration has a mistake. Because see, in the old days, they first wrote basis, then the opinion. Now it has changed. First comes the opinion, then comes basis. I taught you because there is no trust on ICI, they might ask this. So first write definition and then the illustration. This is an example of an illustration. You can write something else too. I have given you a general example. What will you do? You will draw an arrow upside down. First the adverse opinion. Then comes basis, make an upside down arrow and write number 1 and number 2 here. Number 1, number 2. Question 6, disclaimer of opinion. You can see here the auditor. Cut this entire portion, the one I have boxed out. Read until material pervasive. The same way, basis will be number 2. Disclaimer, write one there. Because first heading is disclaimer and then basis. Okay? The illustration for qualified isn't here. You'll find it later. The rest of question 4, 5 and 6 are all here. In exam, they could ask a definition, an MCQ, or a true or false statement. The entire game of the whole chapter is based on these 3 things. Read it carefully. Alright, I'll tell you about the paragraphs. We've read the clean paragraph. The remaining 3 are left for us to read. Read 4, 5, 6 from your notes. Read your notes carefully. If you don't understand, I've kept the chart on screen, follow that. Okay, read. And now we'll see that when we create a clean opinion. We learned financial statements are giving a true and fair view from the paragraph of in our opinion and to the best of our information. If you have seen the adverse opinion paragraph, underline the one I underlined. What is it saying? Though these topics aren't part of interlevel, but you should have the knowledge. Moreover, if this comes up in exams or larger MCQs, it will come in handy. Cut the words, in our opinion, because of the information. I think mission is written there. Write because of information instead. In our opinion, because of the information basis mentioned in the basis for adverse opinion paragraph. The financial statement does not give information. Is that clear, students? I mean, do not provide the information required by the Companies Act 2013 in the manner so required and do not give a true and fair view. Okay? So, adverse does not give a true and fair view and clean gives a true and fair view. Let's learn that how do we write the wordings in disclaimer. Go to disclaimer. Because of the significance of the matter described in the basis for the do paragraph, we have not been able to obtain the CA. To provide basis for opinion, accordingly we don't express opinion on financial report. As we've described it in disclaimer of opinion paragraph, so you can write whatever you want. The officials took records with them or factory caught fire and records were destroyed. You can write it in your own way, but you can't change this. You can write basis in your way. Like because of significance of matter described in basis for do paragraph, we have not been able to obtain CA. To provide basis for opinion, accordingly, we do not express opinion on financial report. Okay? Please underline, we do not express an opinion on the financial report. Clear? Now qualify is pending. Let's clarify. Clean gives a true and fair view. Adverse doesn't give a true and fair view. In disclaimer, because of significance, we are unable to express an opinion. Always remember the code. When you cannot do, what do? Do. And do means disclaimer of opinion. Is that clear? Do you understand all this? Have you all studied these things? Good? Is everything clear? Are the basics clear? So have you studied all 4 opinions? Great, nice. Okay. Let's look at qualified opinion and how it's given. Okay? Inventories are misstated, which means that they are incorrect. So here, which opinion do you think will be removed? Which one will it be? Clean. Misstated inventories, it means you saw it. Which one will be removed? Do, right? The disclaimer will be removed. And now what's left? It is qualified and adverse. The given misstatement seemed to be material but not pervasive. What is it, students? It is material and it is not pervasive. Are you understanding? Material but not pervasive. Which opinion is needed? In FS, there's misstatement material but not pervasive. What opinion should be given? Correct, it's qualified. Look at the wordings of qualified. So first, there will be heading of the qualified opinion. Underline after the words according to the explanations given. Except for the matters described in the basis for a qualified opinion paragraph. Underline from except to qualified opinion paragraph. Except for this, the rest is true and fair. FS gives information required by act and manner and give true and fair view in conformity with accounting principles. Balance sheet statement of P&L cash flow. Do you understand the difference between 4? Clean gives true and fair view. Adverse doesn't give true and fair view. We are unable to express opinion in disclaimer. In qualified, what will we say? Except. For effects of matter described in basis for qualified opinion, FS gives true and fair view. In qualified section, if question provides something, copy it. If not, use own words. Inventories at lower cost and net value but has stated them solely at cost, which constitutes a departure from the accounting standard. Write in your words. Okay? Now tell me, One more illustration. The auditor was unable to obtain sufficient appropriate audit evidence regarding existence of investments in foreign company. The possible effects of this inability to obtain the SI are deemed to be material but not pervasive. Material, not pervasive. What kind of opinion is this? Material but not pervasive. What opinion will you give? It's unable to obtain SI. Which opinion is it? Qualified opinion. So we'll write because in our opinion basis of information according to the explanation given to us is. What does it say? Except for effects of matter described in the basis of qualified opinion paragraph, the financial statements gives information required by act and manner and give true and fair view. In accordance with accounting principles of statement of affairs, balance sheet, profit and loss, cash flow as on marked date. This paragraph, this contains the word except. And instead of except, you can also write subject to. SUBJECT, subject space TO. You can write except or subject, it's your choice. Okay? Take illustration 3 as homework. Do it yourself. Okay? Mark until respectively in the basis paragraph and cut off everything else. Here, cut off the rest. We don't need to learn too much. Come to illustration 4. Let's see what it says. You have to tell the answer. The auditor disagreed with regard to the acceptability of accounting policies and the inadequacy of disclosures in the financial statements. Auditor states that according to me, the accounting policy you've implemented disclosure you're giving is wrong. And he reported the issue as disclaimer. Tell me. Did you see it? You saw it. So is it right or wrong? Wrong. You can't give disclaimer here. Can you give clean? No, as it's a mistake. So what's left now? What is it? Depending on pervasiveness, it can be either qualified or adverse. What is it? It is either qualified or adverse. So the answer is incorrect. Mark it as incorrect. Because our rule is of correct or incorrect. Auditor is wrong in issuing disclaimer as per 705. If the auditor disagrees with the management regarding exceptional accounting policies and inadequacy of disclosures, they should give qualified report or adverse. Simple. What else can come in your exam? It might ask distinguish between qualified and adverse reports. How will you start? Write definition. If FS are misstated and effects are material but not pervasive, this diagram. If FS are misstated and it's material but not pervasive, or if the auditor can't obtain the SI, then the auditor will issue qualified opinion. And in adverse, if financial statement is misstated and effects are material and pervasive, audit will give an adverse opinion. What do we say in qualified report? Except to. FS is giving true and fair view. In adverse, it's not giving true and fair view. Done. The most common report is qualified report. Answer is finished. Completed. We'll finish answers in 2-3 tries. Okay, so according to me, when you distinguish, never write in T form like this in a table form. Qualified, adverse. It's good for memorizing. It's easy, but while writing the exam, what to do? Play safe. Qualified. Write it. Did you write? Write as many points as you know, whatever that comes in your mind. Number 2. Skip a line here. Adverse 1 and 2. Done? So I have explained. This is about qualified. This is about adverse. That's your answer. Okay? Then, illustration 6, state briefly the circumstances when an auditor issues a disclaimer of opinion. Unable to obtain SI. Material and pervasive, then write an example. Whether BOA has been taken by income tax officer or there was a fire in factory. No need to write so much. Understood? Are you clear with 700 and 705? Now move beside to SA 706. 706. Keep it open since we'll read from there. I'll show you the diagram. It's mentioned what you should study. Refer questions from 1 to 6, page 164. Refer illustrations from 2 to 6, page number 166. Whatever you have to study, it's already marked here. Now look at this. Okay, so what does SA 706 states? Emphasis of matter paragraph and other matter paragraph in the independent auditor's report. What is it? Emphasis of matter para and other matter para in independent auditor's report. So students, there are two kinds of paragraph and they are EOM and OM. What is EOM? It's a paragraph included in the audit report. OM is also a paragraph included in an audit report. Okay students, did you understand what EOM and OM refer to? What does EOM mean? One such thing. Something that is not concealed. It is a matter disclosed in the financial statements. So, something that is disclosed in the financial statements. And who is the one who discloses it in the FS? Can you tell me? Who does it? Tell me who discloses it in the FS? Management. A fact that's disclosed in the financial statements. Yes, it's me, an auditor. And as an auditor, I want to tell it to my boss. But who is my boss? Who is my superior? Member. I want to tell my boss. Though the boss or the member will read the financial statement, but it is my duty as an auditor to tell the boss. I'll report. So something that has been aforementioned in the FS. And it is important for my financial statement as well as for my users. It is significant, fundamental. And since as an auditor, I want to report it, so I have to insert a paragraph in my audit report. Now, where should I insert my paragraph? So, you can insert the paragraph either above or below the CAM, based on wherever you want to insert it. Now, what do you call the inserted paragraph? EOM paragraph. It's a paragraph included in audit report. It refers to a matter appropriately disclosed in the FS, and which is also fundamental to the user's understanding of the FS. Fundamental, important, material, significant, these terms have same meaning. To understand FS, there are key points that is disclosed in the FS that I need to tell my boss. But why to report same thing twice? Because it is my duty to report to the boss, even if I have already mentioned in the FS. What is other matter? When we call it other matter, we usually think it's useless, but it is not useless. It is a paragraph included in the audit report, which refers to a matter not disclosed in FS, something which hasn't been revealed in the FS, and it is relevant to my user or client to understand, but understand what? To understand the audit report, to understand the audit and the auditor's responsibilities. So, key points to understand FS comes under EOM. To understand audit report, to understand auditor's responsibility, if something's relevant. So, where will all of it go? It will go under OM. So, something that is fundamental and has been mentioned in the FS. So, EOM, something that's not mentioned in the FS, but it is relevant to the user. Though it will not change his economic decision, so that will be going under OM. Do you understand? For example, I know 90% of you will give wrong answer. The contingent liability, so is it reported under the financial statements? Yes or no? Does contingent liability show in the financial statements? What's the answer? Write in the chat. Students, I knew you all wouldn't know. Yes, it depends on the occurrence. Is it? What did you write? Your answer is far from the right one. Completely wrong. They're quite funny. Students, your accountancy base is completely shaken up. It is totally dismantled. Think again and tell me. In FS, think again. Where will this liability come? Where does contingent liability is written? Students, it's balance sheet, profit and loss, cash flow, notes, and statement of equity. These 5 are what makes the FS. What did I ask? Do you see contingent in financial statement? Will the answer be yes or no? Tell me. Yes, right? Who will write it in the FS? Management. And I am the auditor, okay? And I have to tell this to my boss. Okay? There is something in the financial statements that I need to look at. You can look into the note number 10. You will find it there. I'm not commenting. I'm not giving any opinion. I'm not pointing out any mistakes. I'm just cross-referencing. I'm just telling you, if it is in financial statement, it's a good thing. It's not wrong. It is contingent. Management has already told me, and now I have to tell my boss. When did I tell him where to write? In which para should I write? In the note number 10. Read it. Where is it? In which paragraph is it? What a tricky question. Students, I just taught you all that. Something that is recorded in the financial statement. Students, I am repeating. It is FS, financial statement. It is found in the FS itself. In which paragraph? In EOM paragraph. In which paragraph? EOM paragraph. It will go in the EOM paragraph, emphasis of matter paragraph. Clear? I just need to do cross-referencing. Only cross-referencing. Another example. It changed to WDV from SLM. So it changed. It is change in the accounting policy. Right? Can you tell me if this will be shown in FS? Yes. We'll disclose in notes that accounting policy is changed. Plus, the effect of it will go in the P&L. Right? Should I tell to the owner? In which paragraph? In EOM paragraph, perfect. In which paragraph? In EOM. One more. The new AS was not applicable to us. So to us, the new AS was not applicable. Right? Still we made it applicable, meaning the client has made it applicable. Now you tell me. Will this point will reflect in FS? Say? Right? The effect of accounting standard will come in the accounts, right? The effect of accounting standard will come in the accounts only. Right? The effect of it will come in the accounts only. No matter you pick up which AS, it will be visible in the accounts only and not in any other subject. Right? The effect will come in accounts. Where should I report? In EOM. Let me take another example. The company's GC is disturbed. The going concern is affected. Will it be seen in FS? Where should I tell this? In which paragraph? In EOM para. Simple. A matter that has been brought to the notice of the FS. Right? It has been brought in notice. A matter that has come up in the notice of FS. If we are supposed to write it. Right? A matter that has been brought in FS. So I have to intimate my user about this fundamental, significant and also important. And where will I write it? In EOM. Now OM para. What is OM para? Think about it. I did the audit of holding and someone else did the audit of subsidiary. I did the audit of holding and of subsidiary, someone else. Does this appear in FS? Say? No? It's not fundamental for my user, but it's relevant. What is it for my user? It is relevant. Right? Where should I write this? Tell me. In the OM para. Where should I write? In OM para. The company or the auditor of subsidiary has not made CARO. Or we can say that the requirement of CARO is not fulfilled. CARO. Is CARO part of FAS? No. I have not attached CARO, then where should I write this? Where should I write? In which para? In OM para. In which para? In OM para. Alright? One thing that has come in FS, it's fundamental, significant and important for my user, so it will go in EOM, and second will go in other matter. Okay? And what will not come in FS will go in other matter. See what is written here, question 123, page 169. And whatever I have told you, you'll read from here. So look at this. Question number 1 is objective, right? It is objective. Okay? Question 2 is talking about EOM para. You have to read the whole thing. What considerations are required while including such para? So these examples that we've just discussed, right? Like contingent liability. Subsequent events, new AS going concern, major catastrophe means the point of going concern. And you have to read the given consideration in the RTP. You have to read this. Illustration. Note. This is another example and how we present it. See here. We draw attention to note 10 of FS, which describes the effect of fire incident. In company's production facilities, our opinion is not modified. I'm not saying that management is making a mistake or I'm pinpointing it. I'm just saying that there is something which has come in FS and I need to tell you. That's it. Now you decide it's right or wrong. I just have to give you the intimation. Now in question number 3. Just write what do you mean by other matter and remove this word. Other matter para. Okay? Write this as number 1. And cut this and this, also write this number 2. That pointer has shifted a bit. Illustration. Okay. 4. Always keep in mind. This can come in MCQ or in correct, incorrect. You need to add any para. I've taught you about EOMOM. Now I'll teach about key audit matter para. We need to add a qualified adverse disclaimer para. Alright? If we need to add anything, right? I mean anything. Okay? So what will you say? Do I need to discuss with management? Answer is yes. You should tell them. It is your duty to inform that we are going to do this. Don't be afraid. They will object. Still you have to add it because you are independent. Auditors are always independent. I think I was doing a paper in some class or in some batch. There was question, if auditor has to add a para, he need to communicate it to management? Yes. It may be any para, make a rule. It can be of qualified, adverse or disclaimer. Or it can be the para of UM, OM or KM. If you have to add any para, then freely communicate it to management that we are going to do this. Don't be afraid. Alright. It is very easy. But keep in mind that if it comes in FS or in fundamental, if these two terms appears, then it will be EOM. And if not in FS, it is relevant then in OM. Okay? I have explained you question 4. You will read questions 1, 2 and 3 and come back. If you don't understand any line, then drop it in the chat. Okay? For communication with management, inform everyone depending on level. You have to communicate. What will be the EOM? It came in FS, it is significant, fundamental, and also it is important in EOM. What will be included in OM? Relevant but not in FS. Any doubts? Are you understanding? All right, now come on to your answer of the CAM, okay? Come on it. So we'll do remaining questions later. First we'll do of CAM. Come to CAM's page, communicating. Key audit matters in the independent auditor's report. Wait. Listen carefully. Key audit matter. Now again, half of the people think what is key audit matter? What is it? Listen to me carefully. So first, we will communicate with the management of TCWG, so the auditors communicate. The auditor communicates with TCWG or management as per 2 SA. By the way, which SA? 260 and 265. The auditor communicates with those who are in governance and management as per AS 260 and 265. So much to discuss, right? How many things we've discussed? These 10 things. It can be anything. Which accounting standard or accounting policy is followed? Do you follow in AS? How you do inventory and physical verification? It can be anything. Almost 10 things. I said it during the audit, of course. And from the points that I've conveyed, there are few points that are significant. So the points that I have discussed, there are few points that are significant. If that is your significant point. Who decided this significant? I did that. I did that. This means that the auditor's professional judgment. So some points among the significant ones will become the most significant. So some points will become most significant. Of the points we've conveyed, some are significant, and out of those points, few are most significant. Most significant points will be key audit matter. The most significant points will be key audit matter. What it will be? Key audit matter. Then what to do with this? See, I'm not pointing out any mistakes of the management, okay? You can see I'm not doing that. I am not saying that. See, if the management makes mistakes, so we write in qualifying para. If we commit a lot of mistakes, then we write in adverse para. There is para for mistakes. So listen to me what I did. I just did audit the entire year. So we all sat together to have some tea. You all know about tea, right? Few people have it like this, of both genders. So they were having tea. While having tea, we had some conversation. Then we asked about internal control system. How you do physical verification. We've discussed a lot of things and we got a point about significant things from that. We've got most significant ones. From my point of view, okay, who am I? I am the auditor. So according to me or according to my professional judgment, these are some things and it should go in key audit matter. Where it should go? In key audit matter. Is this clear? So whatever matters that you have communicated, out of those, some are significant, and out of significant, some are the most significant, and if it's most significant, then for you it is a CAM. Okay, it's CAM. Then where I will add it in CAM para? Where does it come? Title, addressee, opinion, basis, going concern. CAM, so we'll write in CAM para. Okay, how will we write this? So first you will give the main heading. Key audit. What happened? Come on. Let me see. Wait for a while. Okay, it's back. Key audit matter. So in key audit matter, I explained regarding some internal controls. Okay? ICS. I'll give a subheading. In that subheading, I can write anything. That I discussed various things with someone which can be regarding any particular matter in this context. Here I'll write their response. Also, I will write the procedure I did for that response. Then I talked to them about the accounting policies. That I spoke about accounting policies and mentioned here that this was their response and this was theirs. Then I applied these procedures. There will be a main heading and then a subheading, and likewise there will be another main heading and subheading. Do it this way. Am I giving any qualifications? No. Am I pointing out any mistakes? Am I giving my opinion? No, I am not. I'm just giving information to the owner that this happened. You don't need to give an opinion on this context at all. For me, this is key audit matter. Most importantly, key audit matters. are not applicable to everyone. To whom these matters are applicable? Key audit matter is applicable to every listed company. Every listed company's audit report must have a heading called key audit matter. Please understand, audit reports of the listed companies should have a heading called the key audit matters. Is it mandatory that there must be key audit matters? No. The heading key audit matter must be there. And you can mention there are no key audit matters, or there are key audit matters, but you don't want to state them because it's your wish and your call to mention or not. Hence, listed companies must always have a heading in their audit report. It doesn't matter if the matter exists or included or not, but the heading will always be there. Okay. In unlisted, public or private, it's up to the auditor to decide to communicate it. They will communicate if they want to, whether unlisted, public or private as per the law. Who says that? The law says that. Therefore, they have to ensure to communicate. 3 points. Listed company. Second is whether the auditor decides to communicate. Then as per the law. Third one is as per the law. Look, question number 1, 2, 4, 5, 7 and 2, 3, 4 and 4, 6, 8, 11, 12 are in model. You have to refer books for 1, 2, 4, 5, 7, 2, 3, 4. See this. Why this essay? Write applicability. Write it over here. Essay applies to complete sets of general purpose FS. Firstly, listed companies. Write one here. When otherwise auditor decides to communicate. Third, law or regulation. Listed, auditor decides to communicate or law or regulation. 1, 2 and 3. Okay. Number 2. What do you mean by key audit matter? Write down the definition. According to essay, key audit matters are those matters which in the professional judgment were of most significance in the audit of FS for current period. Key audit matters are selected from matters communicated with those charged with governance. Over here, write it like as per essay 260 and 265. Cut rest of the text present in brackets. As per essay 260 and 265. As per essay 260 and 265. Then you can cut this part. And then cut third question. Cut this question. Question number 4. What does it say? Whether communication of key audit matters relieves management and auditor to some extent. Here relieve means freedom. Many of the people think, understand this. Now I am going to tell you, let's say for example, in a company, there was a concern about change in its accounting policy. The auditor spoke to the management. He will include it in the audit report because for him, that becomes a key audit matter. And management thinks, the auditor says that key audit matters need to be written and discusses with management. It is his duty to write and discuss about the changes. Auditor tells there are some key audit matters that have to be written. What management thinks? That auditor has already included it in key audit matters. Why should the management disclose? Right? Forget EOM, OM, it has a different scope. We are learning about KM. Auditors have said that they are writing about a change in accounting policy in key audit matter. So the management thinks that the auditor is already writing it. Where will the FSB go? It will also go to the members. Why should management write about anything? So can management relieve itself? Does it have the right to do so? Say, no. It is the duty of management to disclose. Then do. AS commands to do so. It was auditor's preference that he will put it in CAM. It is not a substitute. It is not a substitute for disclosure in FS. It is not a substitute for disclosure in the FS. Clear? One more. Now, for example, management made a sort of mistake. That mistake will be written in the qualifying or adverse paragraph. Same things were present in CAM. Now the auditor thinks, if I'm writing in CAM, then why should I write qualifying paragraph? It will cause doubling. Say, can the auditor be relieved from writing it twice and just write it once? Say yes or no. No. Even if it's doubling, tripling, quadrupling, quintupling, sextupling, septupling, octupling, nonupling or decupling, it has to be done. Must be written. Both have different scopes as he is modifying. He writes according to modification. It can never be a gut feeling to modify KM. It is not a substitute for disclosure in FS. Third, it is not a substitute for disclosure as per SA 570 going concern. It's a matter of GC. If GC is disturbed, will management disclose? Yes. If GC is shook, it is a big concern. Auditor writes advice opinions. Okay? Along with that, they mention title addressee. Then comes opinion basis and then going concern as well, which has to be mentioned. Management has already written. Auditor has already written it in the adverse opinion paragraph and in the GC paragraph. Do you think he need to mention it again in CAM? Yes or no? Yes, it can be mentioned without causing any issue. Doubling or tripling doesn't matter. If it feels like the right thing to do, then the auditor can write it in CAM. It should not be optional. It has to be written. Ensure to mention it. Fourth, it is not. It is not a separate opinion on individual matter. It is not an opinion. There is no need to give an opinion to anyone. It is just to give an information. Question 4 is an important question. It does appear in exam a lot. Okay, mark important. Then, fifth, how as an auditor you can determine CAM? You have to mark this question as important as well. Now see, write the definition first. The auditor shall determine. What do we say to KM? Here, whatever we communicated through 260-265, among those some are significant and some are more significant, which are CAM. How does significant differ from more significant matters? There must be some basis, right? It cannot be stated just on the basis of some professional judgment. Then, areas of higher assessed ROM, risk of material misstatement or significant risk identified. Areas of higher assessed ROM or significant risk stated as per SA 315. Area of higher assessed ROM. In my opinion, if the material misstatement is occurring, so it is high in risk. As per SA 315. Significant auditors. Judgment relating to the areas in FS involves significant judgment of management, including accounting estimates that have been identified as having high estimation uncertainty. Let's say Jitesh did not pay client. He is debtor. Management said that this will be 30% bad debts. The auditor will give his judgment on the 30% bad debt. 20% is now irrecoverable. Auditor's judgment aligning with management's proved insufficient. Let's discuss, is judgment ever correct? I mean, is it 100% accurate? It could be right, it could be wrong. It can be either, right? The first is the area of higher assessed ROM. Number 2 is significance is as per SA 315. Significant auditor judgment in areas of FS involves significant management judgment including accounting estimates. These two factors have been identified as high estimation uncertainty. Cut it from the effect to bottom. Make sure to cut it from effect to the bottom. Now, write question number 6 as RTP. How the auditor would be communicating KM. Give it heading, then a subheading, just read. Okay? Question 6 is homework. Come to 7. When an auditor should not communicate significant matters as KM in separate section. If a matter is most significant on auditor's professional judgment, it should be included in the KM. then when should we not communicate it? Okay, cut those first and fourth, they are deleted. An amendment came in SA. The auditing body we have ASB. The Audit Standards Board removed it. So cut the first part. And the fourth one, it was absurd and confusing, hence it's removed. Look now. I will not communicate if the law prohibits it. Law has prohibited. And for example, I say in the Nirav Modi fraud, it was his fraud, but if I spoke to management. In my judgment, these are significant points and I should include them as CAM, but the law says it's confidential information and can't be disclosed. The law prohibits it, I won't disclose it. In my opinion, it is a CAM, but the law forbids to disclose. Second, in some extremely rare circumstances. In extremely rare circumstances, the auditor determines that the matter should not be communicated in the report because the adverse consequences of doing so is expected to outweigh the public interest and benefit of such communication. Meaning, if I would tell the whole Nirav Modi fraud, the public will go crazy. Everyone would have sold shares from PNB, then people must have looted it and would have caused trouble. The potential benefit was outweighed by the risk. So I won't tell. But if management disclosed it through press conference or by themselves, then I can tell. It says here that this shall not apply if the entity has publicly disclosed information about the matter. If management has told, then I will tell. This applies into cases you cannot communicate in KM because the law prohibits it, and the second is rare circumstances. The benefit will be less and the loss will be more, hence it can't be shared, and will not apply if the entity publicly disclosed information about the matter. Okay? Eighth question. Whether there is any duty to communicate TCWG. Are you aware of it? Is it our duty to include CAM and discuss regarding it? Yes, it is. One can openly discuss. We are independent. Nobody can say anything, even if I am adding a qualifying para. It is because we have the right and independence to do so. I will give an adverse opinion and then have an elaborate discussion. Okay? Ninth question. What is the requirement of documentation in this essay? I have drawn a very easy and simple diagram below. You have to draw it later. Listen to this first. CAM is here. You have to communicate. You can document. CAM is here. But you don't want to communicate the document. You feel like you don't want to communicate it along with your professional judgment. Any document. According to you, this isn't CAM. Still you document. You have to document it. If it's a CAM, document it. If you are communicating or if you are not, still document it. If it's not a CAM, still document it. You have to document these matters all the times. Draw this. Done. Okay? Come down once to question 171. Mark question number 2 as important. Question number 2 is important. I'm telling you the important things. You can figure this out. Question number 1, right? Refer to question 4 on page 161. It's the same answer we referred earlier in which not a substitute was used. It's the same answer. Question may sound different, but answer is same. Model question number 2 is important. Come to question number 3. Look what is written. Reporting to shareholders versus reporting to TCWG. Remember, it is mentioned in the audit report. Reporting to shareholders is in section 143. Reporting to TCWG is written in SA 260. Stat audit report is in true and fair view as per the prescribed format. Here, it is reporting on matters like scope of audit and audit procedures. It is in 260. Stat audit reports are in the public domain. Reporting to TCWG is an internal document, a private report. It is an internal document. It's a private report. This answer can get you 2, 3, 4 marks. Easy. Now, this is audit qualification versus EOM para. Here it is qualification versus EOM, which is a rather tricky question. There will be no pointers. Section 705 includes matter related to qualifications. Section 706 contains information related to EOM. Define both of them. We qualify it when FSR misstated material but non-pervasive. Unable to obtain material but non-pervasive. We add EOM for SA which was fundamental for the user. Right. And if there is anything in the FS, I'll write it in the EOM. Then, it is also subject to report or accept that report. They copied the definition again. Then they have given examples. Give an example of something qualifying and EOM. Sometimes there will be random distinctions. Don't write in T form, you have to write above and below. Okay? Then, right, refer question 2 on question number 5. It was question 2. Yes, plus 5. Refer to question 2 for question 5. It's question 2. Refer question 2 and question 5, page 161, write it. Refer to question 2 with 5 on page 161. It's same question. How do we determine CAM? It's in those areas with higher assessed ROM. The significant audit judgment. And above para is the definition. Question 2 plus question 5, page 161. Let's look here. Key audit matters that are determined to be CAM but not communicated. When are they not communicated? When the law forbids it. Or in some extremely rare circumstances where the benefits are low and the losses are high. Question 7, page 163. Question 7, page 163. Done? Hello, let's start with the PSU. Come to this page. Audit of PSU. This will come for 4 marks. Comprehensive audit. There are repetitive questions for comprehensive audit. Okay. It's repetitive. Let's start by discussing the basics. If we talk about a subsidiary, we make subsidiary on more than 50%. So, when I talk about government's company, the government owns more than 51% share of that particular company. I'm teaching this because it will come in MCQs. You should have a clarity that holding subsidiary is more than 50%. Government's 51%. Government's entity in which minimum 51% of paid up share capital is held by CG and SG. Subsidiary of government company is also government company. Then who will be the auditor? It's CAG. Comptroller and Auditor General of India is the CAG. Who appoints the Comptroller and Auditor General? The President of India. Okay. We've articles. What are those articles? Article 148, 149, 150, 151. Again, which are these? 48, 49, 50, 51. Article 148 is appointment, salary, removal of CAG. Appointment, salary, removal of CAG. Number 2 is powers and duties of CAG. Number 3 is about account formats. Article 150 explains the account formats of the government, CG and SG. 151 explains audit reports format. It's explained in Article 151. Clear? What did Institute say? That these 4 articles of our constitution are where they talk about government companies. About government and its company, okay? 148 is about appointment, salary and removal of CAG. Number 2. Powers and duties of CAG are mentioned in 149, the format of accounts is mentioned in 150, and the audit report format is mentioned in 151. Then, this is MCQ. I think it's given somewhere either in MTP or RTP. Attestation engagement, keep this in mind. If someone here is from Big Four, they may know since we use the term attest function. Attest means audit. We always talk about financial and statutory audit. If you're confused in exam, write this. Attestation engagement means auditing, which means it's financial statement audit. Now, what is direct reporting engagement? DRE-PC. Here it means the performance audit or the compliance audit. PC, DRE, okay? Remember this: performance audit, compliance audit. PC, performance compliance. Which is an attestation engagement? It is financial and statutory audit. DRE means performance and compliance audit. Now, next is another topic, the role of the CAG of audit in government companies. Government company or supplementary audit. What does it say? The auditor of a government company is appointed by the CAG. It's simple, you must know this. CAG will give directions and specify the manner in which the accounts shall be audited. The auditor will create a report and give it to the CAG. Now, he'll submit the directions, issued, the actions taken, and its impact on the accounts of the government company. So he'll include these in report. It will report 3 things: the directions issued, the actions taken, and the impact on the accounts of the government company. Next is very important MCQ. Within 60 days. What does it state here? Within 60 days of receiving of the report. This point came in the MCQ last time. Within 60 days of receiving the report, what will the CAG do? CAG will think whether it should be made in supplementary audit or not. Keep in mind, it's not mandatory for CAG to pass supplementary audit order. If CAG feels the need, it will pass. So, within the 60 days of receiving the original report, the CAG will decide whether to conduct supplementary report or not. After that, he will send it to either to the government company's statutory auditor or any other CA holding COP. Any other CA holding COP and CAG have a full right to comment upon or supplement audit report. Okay. The supplementary audit report shall be forwarded to every person entitled to copies of the financial statements under the section 136(1). In Companies Act 136, report should be given to Malti, means members, auditor, legal representatives and insolvent. Official assigning in case of insolvent members. Supplementary reports copy can be given to all. What else can be done? He can also conduct test audit. According to the CAG Act of 1971, the CAG can also conduct test audit. The provisions of the CAG Act of 1971 also apply to such audit. Remember, 60 days from the date of submission of the original audit report. Very important point. Then, write it down in your book. Propriety audit. Many people confuse it with proprietor audit, but it is not proprietor but propriety. Propriety. What does a propriety audit mean? It's like the world's money is your own money, okay? So when you treat it as your own, only then you can spend it very carefully. Propriety audit stands for the verification and transactions. Definition of propriety audit is verification of transactions on test of public interest, commonly accepted custom standards of conduct. First is public interest, commonly accepted customs, and the standards of conduct. You have to write this as it is. Public interest, accepted customs, standards of conduct. So the propriety audit stands for what? Verification of the test of these things, what the public thinks, how the public works, and how we should work on those 3 things. In propriety, the auditor tries to bring out the cases of the improper, avoidable, and infructuous. Infructuous, that means unnecessary expenses, even though the expense was incurred according to the rules and regulations, so even if it's under rules and the regulations, because that's waste. Expenses more than necessary. Suppose there's kid, but instead of studying he is focusing on the book fonts, then what will happen to him? He will have to repeat the class, but there's no problem because he has money, right? He can use that money. Okay, what is it? He is wasting money, right? This is definition. Let's discuss principles. What is the principle? The government officials should treat public money as if it is their own money so that they can spend it carefully. Government officials should not abuse their authority. Abuse means to misuse the power, to curse, not misusing. Government funds should not be used for particular section or group of society. Public money shouldn't be used on particular religion or caste, but for everyone. Apart from agreed remuneration. No other revenue, what would you say? Apart from agreed revenue, no other revenue is kept open to benefit management, personnel, employees and others. Salary should be same as you earn. And there should not be any extra black money. Everyone knows the source. Okay? Clear? Then, this is hot favorite answer. It is the areas of propriety under the section 143(1). When it's about Companies Act, answers LT dice. What's the answer? LT dice. There are 6 areas. I suddenly remembered that you have audit report chapter in the book. I think it's chapter 7 in audit manual. Okay? Chapter number 7. It's good. Complete series of 700. Companies Act 143, 143(1), 143(2), 143(3). Imagine collecting all bad things and make a chapter out of it, the report. That's the same answer, like this LT dice. L is of loans and advances, T is of transactions, D is of deposits, I is of investment, E is of expenses, S is of shares. That's the 143(1) answer. Areas of propriety under Companies Act. Same answer. LT dice: loans, transactions, deposits, investments, expenses, shares. You just have to remember the code word and then later you can write the answer in your own words. Know the code is LT dice. Then we move on to next answer. Explain performance audit and the issues addressed by it. This is interesting part. The audit is conducted under the rule of the government. Explain performance audit. If the definition is the part of question, you can copy it. Otherwise, if it's direct question like explain the performance, then you have to write this down. Okay? So let's do it slowly. Take your time and open the books. A performance audit is a systematic examination. What is it? Performance audit is a systematic examination of the evidence. Read again. Performance audit is a systematic examination of the evidence. For what? For providing an independent assessment of performance of the government, of the government's FAPO. Performance audit is a systematic examination of the evidence, which are documents, of providing independent assessment of what? Of the performance of the government's FAPO. Now what is FAPO here? It is function, activity, program, organization. It's government's FAPO. So whether there's any function or activity or program or organization. To improve public accountability and facilitated decision making. In order to improve public accountability and facilitate decision making, it will be done by parties with the responsibility. In simple term, the responsible party, which means management, to oversee and initiate corrective action. If there is any error, it will be corrected, but who will correct it? Government department's management, whoever is responsible, they'll do it. This is performance audit's definition. For example, there's DESU, means Delhi Electricity Supply Unit. Don't know its undertaking or unit. For DESU, there will be audit, government's audit. It's performance audit. Is program working properly or not? Is there scheme or any program, any function? Like schemes made by the Prime Minister, but there's no audit for COVID vaccine or PM Care Fund. That's not allowed. So this is the activity of a government function that we audit. What kind of audit is it? Performance audit. What type of engagement? It is a direct reporting engagement. Let's go back to the definition. If it's good definition, copy it. Otherwise, write it. No problem. Performance audit is a systematic examination of the evidence for providing an independent assessment of the government's FAPO or functions, activities, program, and organization. But why? To improve public accountability and facilitate decision making by parties with responsibility to oversee and initiate corrective action. Okay? And now, in performance audit, there are 3 E: economy, efficiency, and effectiveness. So economy basically means money matters. It's minimizing the cost of resources used for an activity having regard to appropriate quantity, quality, and the best price. So remember this: activity with regard to the appropriate quantity, quality, and the best price. A for efficiency. So how much time have we invested here? When will we get the results? How much time will it take? Suppose I've been studying CA for 4 years but with no successful results. What should I do? There's problem with the input-output. Good input results in good output. It's the same here. Is the input-output ratio. Efficiency is best achieved when output is maximized with the minimum of input. Super fast track batch. Fast. Crash course. Okay. Then, audit efficiency will cover following aspects. Human and financial resources will be reviewed, including used operating procedures if used resources are properly protected and maintained, if optimum amount of resources are used and sound procurement practices are followed. Are procurement practices and purchases of raw materials good? We are done with economy, efficiency, input, output, effectiveness. We are waiting for the effective result. Then, its extent through which the objectives are achieved and relationship between intended and actual impact. How we thought versus result. How we thought and how the result was. Intended impact and actual impact, like budgeted and the actual. This is effectiveness. It's performance audit. We discussed propriety audit earlier, which means that world's money is my own money. Now, in performance audit, we'll check the performance through 3 E's: economy, efficiency, and effectiveness. Then comes the big question with big answer here. How would you plan the performance audit? Okay. What does it ask here, students? It's asking how would you plan the performance audit. If the question is asking for short answer, then write what I just taught. But if it's how would you plan the performance, write the wedding story. Suppose Saurav is getting married. He is shocked right now, but he'll get married soon. Okay? How will we define it? The examples that I am giving here is only for better understanding during the class. Don't write it in the exam. Kindly do not troll me around. These examples are for you to remember and for fun. These days kids are idle. Attempts keep happening. It's the trend, isn't it? It's just example. For understanding. Understanding the nature of the program to be audited. In arranged marriage, boy's side goes to the girl's house. The girl is understanding entity or program to be audited. Define the objective and scope of audit. Why get married? Demands. Undefined objectives within the scope of the audit. I'll ask Saurav. Since you're getting married, what kind of girl you want? Determining audit. Criteria. He answers that he wants a beautiful girl with perfect and fluent English, so even if she scolds, he wouldn't understand. I asked what kind of girl you want. He wants beautiful girl. Determining audit criteria. How should you approach her? Speak to her politely and be respectful to her. Greet nicely. And smile. It's deciding audit approach. Now what type of question should we ask? It's called developing audit questions. Revise it again. The girl is understanding entity or program to be audited. Why to marry is define the object and scope. Kind of girl is determining audit criteria. How to talk is deciding audit approach. What to ask is developing audit questions. Saurav is a CA. Assess audit team's skills and whether outside expertise is required. That is assessing audit team's skill or if expert is needed. To know about the girl, he asked for detective's help. And then he's checking her Instagram profile, her Facebook profile, her YouTube, her Twitter, her Snapchat, even Zomato reviews. So what is it? It's preparing audit design metrics, putting on articles, establishing the timetable and resources. Next point is establishing. So the boy got good reviews, the girl is excellent. Boy is ordinary but girl is beautiful. Intimation of audit program to audit entities. The marriage is fixed. So the last step is intimation 1. Intimation of audit program to audit entities. So, 9. It has 9 points, a very simple answer. Let's revise the steps again. Beginning with, girl is understand entity or program to be audited. Why to marry is define objective and scope of audit. The kind of girl he want is determining audit criteria. How to talk is decide audit approach. What to ask is deciding audit questions. Then next is, detective was assigned is assess the auditing skills and whether outside expertise is required. Audit design metrics. Establishing timetable and intimation of audit program. To audit entities. Then, comprehensive audit is most important. It's the hot favorite answer. Okay? Institute's favorite answer. Let's see this answer. Comprehensive audit. What does comprehensive mean? In depth. So it's in-depth audit. Write costing FM chapters in areas that's covered by comprehensive audit. Material, labor, budgetary. Cost and prices, capacity utilization, internal control system. Then write chapters FM, capital budget, cost of capital. Write everything down. Next is your sum of the issues. Sum of the issues examined in a comprehensive audit are OFC trapper. Mark this OFC trapper. It is a repetitive question that frequently comes in exam. It is very important, OFC trapper. How does the overall capital cost of project compared with approved plan cost? Why is it? What is it? How is it? We'll look at all of this after May 12th, okay? Remember the answer written here as it is. Okay, students? How does the overall capital cost of the project compare with the approved plan cost? F is formulation and execution. Our system of project formulation and execution sound. C, are cost control measures adequate? T is technology. What has been the performance in adopting the new process technology and improving profits? R, does enterprise have proper adequate repair and maintenance system? A is, does the enterprise have adequate research and development program? There is a R&D, research and development program. First P, is there a poor or inefficient project planning? Second P is, are purchase policies adequate? These are one-liners, easy to remember. Next is E, are procedures effective, economical? Has the planned rate of return been achieved? This point is very small and interesting. Here, does enterprise have adequate system of repairs and maintenance or an adequate research and development program? So, next is there any poor or inefficient project planning? Are the purchase policies adequate? Are the procedures effective and economical? Has the planned rate of return been achieved? Is it clear? This is the OFC trapper. Hot favorite answer in ICA, comprehensive audit. Okay. Then, next question is, what are the contents of the audit report? For this, contents of audit report, we have a code Garu. Okay. What's content of CAG audit report? Code is Garu. G stands for general review of the working results. It's general review of the working results of the government companies, the deemed government companies and the government corporations. And A stands for the results of appraisal of selected undertaking taken up for appraisal by the audit board, meaning what did the audit board select? What's the appraisal? What's the result? Write it down. Directly jump on fourth point after second. It's the same as second result of appraisals. It is of the undertaking not taken up for the appraisal by the audit board. Second point stated taken up for appraisal by audit report, and fourth point states not taken up for appraisal by audit report. R is details. The word resume is used here. Resume of company's audit report on the directions of CAG and comments on accounts of government companies. The CAG audit report for government company is formed under the direction of CAG. What are the details and comments on it? How will it fit in the line? The word resume needs to be written RESUME, resume of the company's audit report. It will report on direction of CAG and comments on account of the government's company. So, these comments will reach whom? It will reach the CAG. The contents of the audit report of a government company, code is Garu. G is general review of working results of government and deemed government company, government corporation. Results of appraisal of selected undertaking taken up for appraisal by board. Result of appraisal of selected undertaking not taken for appraisal by board. Next, R stands for the resume of the company's audit report on the direction of CAG and the comments of the CAG on the accounts of a government company. Is it clear to all students? Then answer is at the end of the module. So what are the sources for determining the audit's criteria? Remember, you answered about evading the point with audit criteria was what kind of girl you want. So what are the sources? Following are the sources. The code for it is PCPing. What's the code? It's PCPing. The code is what? PCPing. We read the procedure manual of an entity. We found something there. Criteria used by same or other entity. How do we measure sales? Unit wise, how do we see the profitability? You see, like using the other competitors' ways. Policies, standards, directives and guidelines might have some issues. With their parent company or through ROC, if it's listed company, then through SEBI. From I, we have independent expert opinion. Took an expert opinion. Next, new or established scientific knowledge. From G, general management, subject matter, literature and resource paper. He's asking where he'll get the sources for the audit criteria. Code is what? PCPing. They cover this topic at module's end. P for procedure manual of entity. C for criteria used by the same or different entity in similar activities. P for policies, standards, directives and guidelines. I for independent expert opinion and for new or established scientific knowledge. G for general management and subject matter, literature and research paper. PCPing. Done. Finish. All right. Module has 2 TYU. Okay. Then next, in the module, you'll find 3 committees. PAC EC COPU. PAC EC COPU, now the TYU falls under the COPU. Yes, the TYU is now under COPU. My say on this is that you need to remember the answers for all 3 committees for this attempt, PAC EC COPU. Alright. If it comes in an MCQ, how to identify it, I'll tell you. If we are talking anything about money, then it is PAC. If it's estimation or budget, then it's EC. If we are talking about reporting, then it's COPU. It's so easy to remember. PAC EC COPU. Majority of the students will have not even read this. They believe studying Code of Ethics will make them CA. First, what's PAC? It is the duty of PAC to satisfy itself that monies were disbursed legally on the service or purpose to which they are applied. Expenditure, it's related to money. Incurred where properly authorized, reappropriation has been made as per the provision made, again related to money. Next, statement of accounts of the autonomous and semi-autonomous bodies of the audit of which is conducted by CAG under direction of President or statute of Parliament. What is this? Functions of PAC, and it's related to money. You'll either have short notes or a multiple choice question asking which committee a function belongs to. They'll give a committee and ask, identify the function. EC, in the estimate committee. Report that the economy's improvement in organizational efficiency are consistent with the policy. Underlying the estimates may be affected. Estimates. Suggest any alternative policy. Again, it is another option. Examine whether money is well laid out within the limit. Again, it's a limit, so approximation. Suggest form in which estimates shall be presented to Parliament. Suggest form to fill in estimates and submit. There must be some form. AOC 112357. Estimate. COPU. Committee on Public Undertakings is a committee that reports. What do they do? To examine the reports and accounts of public undertakings. To examine reports of CAG on public undertakings. First, report and accounts of the companies. Public undertaking, then reports of CAG on public undertakings. To examine the autonomy and the efficiency of public undertakings and to see whether they are working as per the sound business principles. My favorite, to exercise such other functions. To exercise such other functions. Okay, so these 4. This can be asked descriptive or MCQ. And it has 2 TYUs. Like I said that this is under COPU. Done. 2 chapters done. Assume group audit from CFS chapter is worth 4 marks. So PH is about 4 to 6, roughly 10 marks are covered. So how was it? If you like it, then please hit like. You all already know YouTube's algorithm. At times we read this way, that a chapter is done and dusted in half an hour. I think it will take us a maximum of 45 to 50 minutes. For self-revision along with questions. If we solve questions, we should be finishing one chapter within an hour. We started at 10, it's 11, now we finished 2 chapters. Someone asked about covering the remaining chapters. I have already recorded the 7 new chapters. They were recorded in about 5.5 or 6 hours. Check it out tomorrow morning, that's 6 and now 3. I've completed 9 chapters out of 19. Professional Ethics, 10th chapter already on YouTube. 11th Bank World is on YouTube. 11 chapters are already there. Do you remember what we studied? Download notes from Let's Learn India's website if you need them. I have a website, Let's Learn India. Check it out, you will find it below. This is for specialized areas. It's SAE notes. It's SR 2400 notes. Next, SRS notes, ESG notes, also digital audit notes are here, all are here. You will find it below. 1 minute. There is some issue. Just a second. You have to go on Let's Learn India. You will see it there. Our website is letslearnindia.in. You will find it below. Go to free resources option. Yeah, free resources. Okay. So you will go down and find 800 series notes, the handwritten one that I was teaching you with. SAE series, SRE series. You will get all notes about SRS, ESG and digital audits. I also shared it on Telegram. Okay. Let's go. Let's cover our last chapter today, NBFC. Come on this NBFC. Shall I start NBFC? ICAI announced they won't ask questions in previous modules. It's clear they won't ask about the concept. ICAI announced, so where will the question come from? Past questions and not new ones. New questions will come from new only. Do some analysis. Just use some common sense. Read the new course from the new one. The old ones. Solve past questions. So, I shared the link of past questions answers on Telegram today. Means it's video. It is shared. So take a look. Moving. So again, it's 11:10 and will take us about 35 to 40 minutes to cover NBFC. There has been no addition in NBFC. Okay. What does NBFC say? So the bank and NBFC are together. The bank will definitely be there. NBFC gets 4 marks. Bank question gets 4. So 8 plus 2 mark MCQ, total 10 marks. It'll make your work easier. What is NBFC? It's a financial institution that can be a company. It's a non-banking institution, which is a company with principal business of receiving deposits or lending money. Main is lend and accept deposits, or any other institution as may be notified by CZ. Students, did you understand this? Then, next first point. To constitute it as NBFC, meaning how can we tell if a company is an NBFC? Check if income from financial assets is greater than 50% of the total income, and financial assets should be more than 50% of the total assets netted of intangible assets. Over half of your assets should be financial asset. And whatever is the total income should be more than 50%, more than I'm intentionally emphasizing so you remember that it's more than 50% of income from financial asset. Not at exact 50 but should be over 50%. Data may be given in exam in MCQs or descriptive form. Descriptive questions have been asked earlier. If asked in MCQ, then look at the options carefully. It should be more than 50%. Both the conditions have to satisfy, only then it will be a NBFC. One second. Okay. What does it say? If an NBFC meets the criteria, what will they do? They'll go to their parent, RBI, and bring what? A registration certificate. And they must have what? Net owned funds. All right. Now the RBI has notified different amounts of net owned funds for different categories of NBFC, including 2 crore rupees for certain categories for NBFC. It applies to few NBFC now, which few is not in our syllabus. Now next, let me tell you, on the 8th at 10 a.m. on Telegram, something big's going to happen. What is the criteria for the net worth of NBFC? Check out the module at least once. You'll see it. RBI has prescribed, for certain categories currently applying for registration as NBFC. The minimum net owned fund required is 10 crore. As of today, it is 10 crore for few. That 2 crore is still very much there. We don't know about those few. Generally now it's 10 crore rupees given in the module. No, don't get it wrong. It's not 2, it's 10 and it's written there. See. Okay, the given criteria is 10 crore, but not everyone will have that. So they have asked them to do it in a phased manner by 2027. The module says 10 crore, and if an MCQ is asked in the exam that what should be the net owned fund, it is 10 crore. It should be 10 crore rupees. netted off by intangible asset. If you have an asset of rupees 100 in the question, assume if you are given rupees 2 as intangible asset, then the remaining is 98 rupees, then you should have more than 50% of 98. Financial assets should be more than 50% of 98. Okay. This is pointless. Come to the layer part. The layer part is important. Okay, layer part. It will be seen in exam also. And it should be seen. Because last time it was not asked. This time it will come. So how many layers are there? 4 layers, that is Bamut. Bamut, base, middle, upper and top. Bamut. Bamut. Base, middle, upper and top. It creates confusion as upper and top are similar. Upper, upper, upper and top. Bamut. Base, middle, upper, top. Best part. Look here. Is going backward. What is top layer? It's empty. Just like our brain is empty. The top layer will remain empty. Don't need to think so much. See, the easier you make the content, the more it benefits you. Top layer is empty. Just like our brain's simple. This layer can be populated if the RBI of the unit prints that substantial increase blah blah blah. We'll see when asked. When asked will be CS, which is a normal behavior. Okay, what will be in upper layer? Which NBFC? Upper level comprises of those NBFCs which are specifically identified by RBI as warranted enhanced regulatory requirements based on a set of parameters. The one with more mess goes to the upper level. Now which category goes up? They've told. Top 10 eligible NBFCs. In terms of their asset size, will always reside in the upper layer irrespective of any other factor. Next. Top 10. So if an MCQ has 4 choices, forget about upper and top, none will be there. They haven't mentioned the top 10. The criteria mentioned above will help us identify. With a multiple choice question with 4 options, base, middle, upper and top, removing the upper and top, the fight is now between base and middle. How to remember base and middle? First, let's study base. Okay. Who will come in base? In base level NBFC. Non-deposit taking NBFC is what? Non-deposit, pay attention. Non-deposit taking NBFC below asset size of 1000 crore. Did you all get it? Below the asset size of 1000 crore. Below 1000 crore. Okay, what kind of NBFC is taking? Strange name, a very strange name. That we've never heard before. They will come here. Strange ones are over there, sorry. Common ones are here, it's the common ones. NBFC peer-to-peer lending. Peer-to-peer means like Bajaj Finance lending Bajaj FinSub. Tata Capital is lending Hero Homes. Like peer-to-peer. Alright, NBFC account aggregator. P2PA. A non-operating financial holding company, also known as a no-FHC. And the fourth point, NBFC is not availing public funds and not have any customer interface. This is the fourth point. They don't have any money from the public and no customers. There's some NBFC like that. Okay, what did I say in this? No. We're done with NBFC peer-to-peer lending, NBFC account aggregator. Non-operating, not availing fund. If you see the word not anywhere, it's under base. What data needs to be remembered? It's non-deposit. Non-deposit, non-deposit. Asset size less than 100 crore, less than 100 crore. Did you understand it? What's in the middle? Tell me. All deposit taking NBFCs. All deposit taking NBFCs, irrespective of the exercise, will come under middle. Then non-deposit taking NBFC with an asset size of 1000 crore or more. Meaning NBFC with an above 1000 crore will fall under middle level. NBFCs below 1000 crore fall under base. 1000 and above go under middle. Okay. The question will confuse you. They'll give 750 crores, 1000 crores and mention deposits. NBFCs that accept deposits will always fall under the middle category, irrespective of their asset size. There are chances of seeing them in exam. Then something strange you'll hear first time, SPD. Standard primary dealers. IDF Infrastructure Debt Fund. CIC Core Investment Companies, Housing Finance NBFCs and Infrastructure Finance. We have never heard these IDF and CIC and others. These will go in middle. The ones I need to remember are the non-deposit. Under 1000 crore in bottom. Meaning less than 1000 crore will fall in base. What? Base. Over 1000 crore in middle. Okay. Asset. Oh, sorry. The ones taking deposit will go in the middle. Where? In the middle layer. Irrespective of asset size. Did you all understand, Bamut? Students, did you understand Bamut? Perfect. Then there's another point in this. If questions arise, remember that the government-owned NBFC shall be placed in the base or middle. As a case may be, they will not be placed in upper layer till further notice, either in base or middle. You might see this as an MCQ. Okay. This has 3 T-values. The third T-value is important. The third T-value in the module is very, very important. I have also mentioned the page number 14.116. The first 1 and 2 were easy. 1 is different, 2 is very easy. That's in the certificate of registration. You need to read the third T-value. They have given a long extract of the balance sheet. This is a very long question and important. If we find it in any sum, we'll do that in class. But let's get back here. Descriptive questions. The difference between a bank and an NBFC is simple. An NBFC cannot accept demand deposits but can accept term deposits. Can't accept demand deposits over the counter but will accept other term deposits. NBFCs do not form part of payment settlement system, can't issue check. Deposit Insurance Credit Guarantee Corporation DICGC facility is not available. No minimum exposure to priority sector like agriculture. That is also not for them. Done with second question. Prudential norms can be helpful in MCQs. Every NBFC shall maintain a capital risk ratio of tier 1 and tier 2 minimum of 15%. If it's tier 1, then it should be 10, minimum 10. And if it's gold jewelry, then 12, minimum should be 12. So 15, 10, 12. Tier 1 and 2 is 15. Tier 1 is 10 and gold jewelry is 12. This can be asked in MCQ and not in descriptive way. Next, when is NPA formed? So half of you will think that it is changed as Bamut has come. What we used to study was systematically, non-systematically. No change in the module and they have not mentioned any change. And we don't need to think so much, just study the same as given. Okay, non-systematically, systematically. Important, non-deposit taking company, non-deposit taking company. Here it's deposit taking companies RBI Direction 2016. For them, when does it become NPA? More than or equal to 6 months. And for lease or house property. Sorry, hire purchase, for lease or hire purchase, it's 12 months. Here, more or equal to 3 months. We always practically follow the systematic ones, the 3-month ones. Okay. For standard, no risk, no risk. What would be the substandard asset? It falls under the NPA category. For how long? Less than or equal to 18 months. 18 months or less. Here, it has been in the NPA category, less than or equal to 12 months. What will we say about the doubtful one? It has been in substantial category for more than 18 months. Here it has been in substantial category for more than 12 months. Okay, non-systematically. Systematically, you have to remember it's important. Non-deposit, non-deposit. Deposit taking company and deposit taking company RBI Direction 2016. Did you all memorize it? Very well. Now provisioning. For loss, we always do 100%, and for doubtful, if it is unsecured, then also we do 100%. And what does he say for secure? It depends on year. 0 to 1, 1 to 3, more than 3, 20, 30, 50. It's 0 to 1, 1 to 3, over 3, 20, 30, 50, substandard gets 10%. And for standard, see, I follow a pattern. First I speak of non-systematically, then systematically. 0.25 for this, 0.40 for that. Non-systematically 0.25 and systematically 0.40 MCQ. Then there is a question in your question bank. What procedure should be ensured by the auditor for the company for compliance with CARO 2020? If you remember, there is clause of CARO. Clause 16, which is specifically for NBFC, and some detail is there in clause 3. And in debts too. So you must carefully read the clause number 16. Okay, read it carefully. Then next is applicability of Ind AS on NBFCs. This is an old question, it's over now. And it is already applicable. From April 2018, this was applicable to all listed and unlisted NBFC with net worth initially referred to as net owned funds but now net worth is 500 crore and their family holding subsidiary joint venture associate. From 1/4/19, it applies to listed unlisted NBFC with net worth between 250 to 500. 500 will go up. Who are there between 250 to 500? and their family holding subsidiary, joint venture and associate. It's exam question of November 23. The difference between division 2 and 3 of schedule 3. What does it say? NBFC is required to present the items of the balance sheet as per liquidity, which is not allowed to companies required to follow division 2. Okay? We'll show NBFCs based on liquidity as it's not applicable to normal companies. How do NBFC classify items? Financial and non-financial. But how we usually do it? Current and non-current. NBFC is required to disclose by notes. Other income or other expenses more than 1% of total income. Okay? Other income and expenses over 1% of total income must be shown separately. Whereas, how do we show any item or expense more than 1% of the revenue from operations or 10 lakhs, whichever is higher? Can be used in MCQ 1% of revenue from operations or 10 lakhs, which is higher. So what we will do? We will disclose it separately. Okay. Then what? What NBFC is required to disclose under receivables? Debt owed by LLP. So the debt due from LLP, wherever director is a partner or a member, disclose that separately. Okay, separate disclosure of trade receivables which have significant increase in credit risk. If credit risk has increased there and credit is impaired, then you'll disclose it separately. These are 6 factors and there is one more. NBFC required to disclose items of revenue from operations and OCI on the face of P&L instead of showing as a part of notes. There are 6 points. It's question of November 23. And this point is important. Okay? These are other income and expenses exceeding 1% of total income. Any income or any other expenses more than 1% of revenue from operations or 10 lakhs, whichever is higher. Okay, whichever is higher. Then, question 6 says classification of frauds by NBFC. Its code is M-FUN-CIA. What does M-FUN-CIA states? Misappropriation and criminal breach of trust. F for fraudulent encashment through forged instruments, manipulation of BOA. You unauthorized credit facilities extended for reward or illegal gratification. N for negligence and cash audit. C for cheating and forgery. I for irregularities in forex. A for other fraud. What will be 4th and 6th fraud? Intention to cheat is suspected or proved. Following will always be disclosed as fraud. How? The cases of cash shortage for more than 10,000 and cases of cash shortage for more than 5,000 if the fraud is detected by MIA. M for management, I for inspecting officer, A for auditor and not by the cashier. More than 10,000 is for cashier and for MIA it is 5,000. Okay. And if there has been any fraud in any foreign branch, then it also has to be informed to RBI. The code is M-FUN-CIA. Then, how as an auditor you will audit an NBFC? Tell me, how as an auditor you will audit that? So this will be a long answer, Bira P. Of which? This answer and MP-FUN-CIA both are important. A for ascertain the business of NBFC. What is the business? Check it. I evaluate the internal control system. Check that. Now R. Registration with RBI. We've discussed net worth fund should be 10 crores. Net worth fund should be 10 crore and you have to meet 50-50 test. A for acceptance of public deposit. What does A stand for? Acceptance of public deposit. Alright. Now what is the code for it? It is BARISI. BARISI, this could be a separate answer in acceptance of public deposit. What will check first? Board resolution. So auditor should check that in case of NBFCs not accepting public deposits. Okay, the board has passed resolution that they will not accept the public deposits. A for. The auditor should check whether NBFC accepted or renewed public deposit only after the written application form. A for application form. Next is R. What you have to check? Verify deposit register maintained by NBFC. Verify what deposit register maintained by NBFC. And one more thing, check if the return is filed properly or not. An I stands for investment should be made only in liquid assets. Other I, the auditor should check interest calculation in respect of public deposits. And what do we have to check from C? Credit rating. Okay, credit rating. BARISI. Board resolution, application form, deposit register. Return, then I for interest and another I for investment is made. In approved liquid assets only, and C stands for credit rating. Okay. The credit rating answer came separately in the exam. In event of upgrading or downgrading, the auditor should check. The NBFC have also increased or reduced its public deposits as per revised credit rating assigned to it. The syllabus we've been given is just for downgrading. What will happen if it gets downgraded? With immediate effect. What is it with immediate effect? With immediate effect, stop accepting fresh public deposits and renew any existing deposits. All the excess deposit, because if the rating falls, then the excess deposit should be run off to maturity. Report the position to RBI within 15 working days. Okay, in 15 days. And no matured deposit shall be renewed without the expression voluntary consent of depositor. It's also useful. The complete answer is Bira P, in that the answer of a whose code is Bari C, and in that there is answer of C, which can come separately. Then, what stands for P? Prudential norms. Okay, it stands for prudential norms. What is the answer of it? So, what will be the code? Copy. The auditor should check compliance with prudential norm in regard to what? Capital adequacy, asset classification, and prohibition for loan granted against own shares, provision for bad and doubtful debts, income from investment, income recognition. So what do we need to check? Compliance with respect to CAPI. Those who studied from me will know the code of CAPI. Now what needs to be checked? The board should check, the auditor should check that the board has a policy on when to grant the demand and call loans. Okay, for granting them. Then you should check proper classification of loan and advances, that is standard, substandard, and doubtful loss. He should check that in respect to income from NPA. This is recognized only on a realization basis and not on an accrual basis. He should check whether income from NPA is received in current year or still they continue with NPA in previous year. So the NPA of last year, is it still NPA or has there been some income? If there has been, then we'll consider them as performing. There are 5 points in CAPI, let's discuss. Check the policy for granting demand and call loan and see that loan and advances are properly classified. The income of NBFC will always be on cash basis. And also check that the last year's NPA, is there still NPA or the money is received on its behalf? Okay. Then you can read the answer related to audit procedure, which is related to vouching verification of IPCC. Now it comes of audit report. Audit report. So there are 4 categories in this for all NBFCs. Question 1, all points. Question 1 taught you the NBFC criteria test of 50-50. It was about net owned fund. Same point. So what you'll write in NBFC accepting public deposits? That all points of 50-50 test and of net owned fund, and also you need to get registration certificate from RBI. And also we have to write Bari C. For NBFCs not accepting public deposits, this is also included in module. This is also added there. Then you will write those 3 points of A. And this is not accepting. So whether the board has passed a resolution for not accepting deposits and they have not accepted and they will not accept deposits in the future. Okay. Whether NBFC is compliant with prudential norm regards, see again CAPI is used. Capital education norm, asset classification, and provision for bad debts, prohibition for granting loan against own shares, income from investment, and income recognition. So whether NBFC has been correctly classified as MFI, microfinance institutions, and whether the capital adequacy ratio as disclosed in return submitted to RBI has been correctly arrived. So we have to write A and these 4 points also. Then the last answer is, what are the obligations? The question is irrelevant. Consider 2 words, obligation and exception report. Take these 2 words as it's an important answer. Okay, obligation and exception report. These are the 2 terms. So, in case of NBFC, any of the items referred in Rule 3, which we've read, it's called as Para 3. So this reporting part is called as Para 3 of NBFC's auditor's report is unfavorable or qualified. Or in opinion of the auditor, that company has not complied with 3 points. What are that? First, provisions of Chapter 3B of RBI 1934. Next, NBFC acceptance of public deposit RBI Direction 2016. Third, NBFC non-systematically, systematically important non-deposit and deposit taking companies RBI Direction 2016. If these 3 things are not complied, then you are obligated to report. Leave remaining question, focus on 2 words, obligation and exception report. Then therefore, it is a bit blur. It shall be the obligation of auditor to submit exception report to concerned regional office of the department of RBI under whose jurisdiction the registered office of company is situated. So what we have to do? It is an obligation of the auditor that we have to submit the report to Concerned regional office of department of RBI under whose jurisdiction NBFC is registered. So this is the answer. There are 3 points. Provision of Chapter 3B of RBI Act 1934, NBFC acceptance of public deposits, RBI 2016. NBFC non-systematically, systematically important, non-deposit taking company, RBI Direction 2016. Non-deposit and deposit taking company, RBI Direction 2016. It's over. So how was it? Do you liked it? It's completed. So those who have already studied and have prepared the notes properly, they will get the immense benefit today. All right. Rishabh is saying that, can we do Karo in 10 to 15 minutes? Yes, you can do it. I am tired. This is given in module question. It is written 25 lakhs there. But do as per 10 crore because 10 crores is given in question. The previous answers have not been updated. It's 10 crore rupees. It is written on 14.83, okay? So this is the question which I mentioned. Let's do this. So see, what is this? All those people who have been totally relying on their authors, teachers, and who have not studied from me, I earnestly request you people to complete the questions and also the TYU of the models. Otherwise, you'll come on 8th and say that the paper of audit was tough as it came from outside. And I'm sure that around 5:15 any YouTuber will come and say that paper was tough and it came from outside. So the new things are provided in the module and it will come from here only. I'm not saying same, but something similar will come. And we can catch the pattern. Those who have not downloaded the module, you have 3 days. Later don't say that you don't have time. Don't say it's Sunday tomorrow, so I'm going to sleep or going to watch the IPL match and do time pass. That will happen every year. But you need to focus. Okay? See what kind of question comes. They are tough. Approx. 53 TYUs are there. It's difficult. You are the auditor of deposit taking NBFC. The story is that this NBFC is identified by RBI. It is in the upper layer in top 10. These financial statements must be prepared as per Ind AS requirements. Following is an extract of P&L for year ending March 2023 in accordance with Division 3 of Schedule 3 of Companies Act and last year's figure. Okay. Revenue from operation 9,500. There is dividend, rental income, fees and commission. Net gain on fair value changes and there is net gain on other things. What is the total revenue from operations given? It is 9900. Other income is 100 and total income is 10,000. Okay, it's like this. Now what is asked? On going through the details of head other expenses. In expense side statement of P&L, it is noticed that there is an expenditure relating to manpower outsourcing cost amounting 99.50, included under other expenses. Does it meet the requirements of Division 3? He's trying to say that the other expenses was 99.5 relating to manpower outsourcing. So does it meet requirement of Division 3 of Schedule 3? It says that if I have any expenses, it mentioned the point of other income or expenses. Other income and expenses exceeding 1% of total income must be shown separately. Okay, it has to be discussed. So see from where it has picked up the point. And asked means if you don't remember this point, then 4 marks are at stake. What is asked? Other income, other expenses exceeding 1% of total income. Now, think about this. Half of the students won't even understand from where to find it. So many figures are given. Tell me which figure should I use to calculate exceeding 1%. Already data is given. So of what data I have to do exceeding 1%? This is clear that other income and other expenses exceeding 1%. 1% of what? Very good. 1% of what we have to do? We have to do 1% of the total income. Do you think you're genius? How much will be 1%? So what it will be? Tell me. All right. It'll come 100. Those who don't know maths, they can do on calculator. And how much is the expense? 99.5. The expense is 99.5. Further, the question says that if your other income or other expenses is exceeding 1% of the total income, then it has to be shown separately. The provision also says this. Here it is 99.5. Okay, it is 100. We want above 100 and not below 100. Then I have to disclose because exceeding is mentioned there. Right? So tell me, you have to disclose or not? Tell me, you have to do it or not? No need to disclose. Okay. Let's check the answer of 3 of TYU. It is amazing that the answer is given here at the back. Okay. The expenditure of 99.5 does not exceed 1% of total income, hence meeting the requirements, and should not be disclosed. It's over. So such TYUs are given at the end of each chapter, and all these questions are based on new level. None of them are based on old. I request you all that whenever you are revising, please solve TYUs and the questions of test your knowledge, which is given behind the modules. Okay? Do this as well. Okay. Let's start. I taught this in yesterday's special. I'll quickly recall it in half an hour. Many people probably missed it. So the IFC will carry a weight of 2 to 5 marks. Chats are closed for now. If anyone has doubts, they can ask. When topic ends, or if I'm in middle of a large topic, ask me for a break. We are studying exam-oriented things now. There will be fun and jokes, but don't talk nonsense. Let's start. IFC. The internal control system is a large domain. Listen, I'm revising it for you. You see, the internal control system is a very large domain. Swiping the card, or if there's access there. I'm talking about thumb impression and not swiping machine. Card will be shown for entry and will be used for attendance purposes. There's procedure for inventory. There will be a recruitment for an employee, for admission of employee there. Okay. So all these things are internal control system. Inside it, there's a small. What would you say? Inside it, there's a small system that is called IFC. IFC, Internal financial controls. There's a small system within it that we call IFC, internal financial controls. What does this mean? These controls, so students, what kind of controls? The controls that focus on the financial matters. What kind of controls will there be that will focus on financial matters? Controls that will take care of financial matters. For example, I have set up a control system for sales. If there's a sale, it will require approval from A, B, C, and D. If there's a discount, it will require approval from E, F, G, and H. So there's a proper system. That system is designed internally. That control is designed internally for financial line item, FSL, financial statements line item. That is called as IFC, that is internal financial controls. For purchase, we are saying that A will come first, then purchase manager will say, authentication is required, go up to reorder level, up to danger level, and to safety level. Then we will ask for quotation. Once quotation is received, we will place order to the one who offers best quantity at lowest price. Then we will value the stock at the time of payment. So I have set up this complete control for the purchases. These controls for the purchases, what will these be? Internal financial controls, right? It will be internal financial controls. So the definition first, IFC means. IFC means the policies and procedures adopted by the management. So who sets up the IFC? Management, to ensure D-Baba. D-Baba, people are studying from module 5.9 in our book, I think. It's between page number 300 to 350. Content is the same, you need not worry. I cannot use the books here. That's the reason for the problem. We can use in some chapters. There's some issue in other chapters. I'm teaching by module. Use any author's book, mine or chart book, same content. Whatever you use, content will be same. IFC is set up by the management to ensure D-Baba, that's detection and prevention of frauds and errors. D stands for detection and prevention of frauds and errors. Okay. B stands for the smooth conduct of business. Alright. Then A stands for safeguarding of assets. What? Safeguarding of assets, and the other B stands for maintenance, accuracy, and completeness of accounting records, means BOA. Okay, the other A stands for adherence to the company's policies. Adherence to the company's policies, right? Timely preparation of reliable financial information. Remember if you can, else D-Baba. IFC is set up by the management to ensure D-Baba, that is detection and prevention of frauds and errors. Smooth conduct of business, and A for safeguarding of assets. One of the B is accuracy and completeness of the accounting records, books of accounts, and A for adherence to company policies. And timely preparation of reliable financial information. D-Baba. D-Baba. Okay. What is ICFR? What is ICFR? Students. What will it be? The auditor will issue the report. The auditor will prepare a report on internal controls. It is called an internal controls report or internal controls over financial. Report, FS report, is already submitted. The audit report has 2 annexes. The audit report will have 2 annexures, Annexure A and Annexure B. Annexure A will talk about cars, which we discussed yesterday. We'll cover the audit report in series 700 studying Annexure B, which will be report on ICFR. So, when the auditor writes 143 subsection 3, report on other legal and regulatory requirements in his report, those who have studied through me will know that A, B, C, D, E, F, O, F. F point from the above that I just read from, that I'm referring to F. It refers to what? The financial controls. Okay. So, he will write there that IFC is present and is correct. The report is prepared in Annexure B, that is Annexure 2. So, the report will be at the back. Here it's for cross-reference. Will he announce loudly and say that he has obtained reasonable assurance? He has obtained reasonable assurance for what? Alright, company's ICFR includes those policies and procedures that are designed for maintenance of records and what's written next. Are they accurate and fairly reflect the transactions and disposition of the assets of the company, meaning its onboard debit and credit. And the disposition of assets means selling of the assets, because there are proper records, proper policies and procedures for maintenance of records, which represents the transactions and disposition of the company's assets. Provide reasonable assurance. Provide what? Reasonable assurance that financial statements are prepared according to GAAP, as per GAAP. Generally accepted accounting principles, financial statements are prepared as per GAAP. Third, there are policies and procedures. We provide reasonable assurance that DNP, that's detection of unauthorized use, meaning safeguarding of assets. Prevention and timely detection of unauthorized acquisition, use of disposal of company's assets that could have a material impact on the FS. So what will we say? We provide reasonable assurance regarding safeguarding of assets. So there are 3 things. First is maintenance of records, reflect true and fair view of the transactions and the assets. Number 2, reasonable assurance that accounts have been prepared as per GAAP. Next, reasonable assurance that prevent safeguarding of the assets. That's it, done. It was asked once in exam to explain IFC, ICFR or distinguish between IFC, ICFR. Distinguish is nothing, just write definition. Okay. Then what does it ask next? Asks which provision of the Companies Act requires IFC reporting. All means all, and that includes every company. The IFC applies to all companies, and every single one must comply with its requirements. But if you remember, there's something called DRS. The directors of a listed company will proudly announce, with a sense of accomplishment, that the company has successfully implemented IFC, meaning it is now effective. It is not that IFC is only applicable to listed companies. IFC is applicable to all companies. But only listed companies' DRS will announce that company has implemented IFC and is effective. Okay. Where will the rest of companies mention the IFC? Companies will mention in the board report. These have come by the rules. In 143, this I've already told you, in 143 subsection 3, auditor will mention that IFC is present and effective. Okay. The audit committee and independent directors both have responsibility towards IFC. Alright. These are some provisions that should be known, that are everyone's responsibility: boards, audit committees, an independent director and auditor. That's it. In which DRS you'll find it? In the listed companies DRS. Then IFC is applicable to which companies? IFC is applicable to all the companies, meaning each and every company. So basically every company has an IFC. So when the auditor will issue a report, it will be for every company. He'll create it for everyone, applicable for all. Further, it states that he will have to report on ICFR. He will have to report on ICFR in respect of both standalone and consolidated FS. Standalone and consolidated FS, that means, as we discussed yesterday, this isn't applicable on consolidated, but what about ICFR reporting? It's applicable for standalone as well as CFS. It is applicable for standalone as well as for CFS. Okay. So now listen carefully. I have taught you when the auditor will create the report. So in that 143 subsection 3, in every company means all the company have A, B, C, D, E, F, O, right? Next. He will report it, but he will not report on F. F means internal financial control with respect to financial statement report. He will not do it in case of a private company, which is OPC, which is a small company. That is other private company. In other private company with turnover less than 50 crores and loan less than 25 crores. Loan taken from the bank, or taken from FI or from other company. Taken from bank, taken from FI, taken from other company. Okay. When do you check this? Students, at any point of time. So it's not that IFC is not applicable to them. IFC is applicable to them. 1 second. Wait. Now see, IFC is applicable to them. Did you understand? IFC is applicable to them, but the company's auditor will not report it. Okay? So he will not report in entire 143. No. He'll write the following in report: A, B, C, D, E, and O, but not F. Who has the time to write an F in their exam? No one. Live your life to fullest. OPC, small company and other. What will come under other private company? Turnover less than 50 crore and loan less than 25 crore at any point in time from a bank, FI, or other body corporate. The auditor that they have will report on A, on B, on C, on D, on E, and on O, but will not report on F. As an auditor, I have to check throughout the year, but the procedures and process will be more frequent towards the year end. We are talking about the financial year. Okay, what I'm saying is, yesterday I gave an example in July 2022. There were deficiencies, some deficiencies under my control. Okay, but the controls were rectified. Controls had deficiencies but are now rectified. So it has been rectified on 31st March 2023. As an auditor, by 31st March 23, tell me. Controls were defective during the year and controls are rectified. The IFC controls are rectified. They are all right. March 23. Which opinion should be given? Which opinion? Three opinions, because when he reported on 31 March, everything was right that day. Now look, the guidance note clarifies that the auditor will have to report that the company has an adequate ICFR system in place and whether same is operating effectively. It was and will be effective as of the balance sheet date. In practice, this will mean that when forming its audit opinion on ICFR, the auditor will surely test the transactions during the year that's checking throughout the year and not just at the balance sheet date. However, the extent of testing near the balance sheet date may be high, meaning more checks will be done, but yes, throughout the year, if control issues or deficiencies are identified during the interim period and are remediated before the balance sheet date, read it again, then the auditor may still be able to express an unmodified opinion. Unmodified means a clean opinion. What will that be? Clean opinion. Then, what is the extent of reporting? What kind of assurance can I give? Reasonable assurance. So the auditor will obtain reasonable assurance and announce that the ICFR is present and it is working effectively. Students, I will not guarantee future viability. Auditor's opinion does not assure, for example, future viability of entity, nor efficiency or effectiveness with which management has conducted affairs of entity. I can't predict future. I can tell you that yes, if it's there and it's effective. Will you walk through life? What will ABC be? What will its importance be? I don't know. If so, then it's over. 6 questions and all are important. Finished. Done. 15 minutes. How was it and how did you feel? Tell me. Ask me if you have doubts. Great, amazing. No one has any doubts. Very good, very good. Understood. Our IFC is done. Doubts anyone? You can ask me. No doubts? Let's move on to the next chapter. In this, you have to remember this is and. And turnover less than 50 crores and loan less than 25 crores at any point. This could be asked as an MCQ question in your exam. Got it? Keep in mind. Now let's end this. Let's resume. Wrap. The risk assessment chapter should finish in 45 to 50 minutes. Shall we start? Okay, let's begin. Ready? And 3 and 2 and 1 go. Okay, now let's go. I think it will take 45 to 50 minutes. So, wrap. In this module, I think chapter number 3 will be a technical chapter and is important if we do this. And such 315, 330 questions if solved once properly. You don't need to read 315, 330, just do it properly. Plus, read 315, 330 from whatever author books you have. Okay. Practice questions. You can do 315, 330 easily. This will definitely come in exam. We can't skip this. Now what it says is the ICS. The system set up by the management, we again need to write the DBABA. Whether it's IFC or ICS, what will you write? DBABA. Got it? Detection and prevention of frauds and errors, smooth conduct of business end. Safeguarding of assets, maintenance of books of accounts, other ends to managerial policies. The same things again. The next question is, what are the inherent limitations of ICS? It's asking limitations of ICS. What do we call this? Code is team. Teamwork. Teamwork avoids fights. The effectiveness of internal controls. And cost effectives of internal control cause human error, chances of error. Abuse of authority by the management and manipulation by management. Therefore, this is what team code means. This can very much happen. No matter how hard you try, some things will always be left. We call it inherent limitations of ICS. Inherent limitations of ICS. Then, next question can also be asked in exam. I think I will teach you this in automated. Yes, in automated environment, and in that, I will explain 5 components of an automated environment. What are those 5 components? Control environment wrap. Control activities, information, communications, and monitoring. My classroom is a controlled environment. Theft is a risk, so we've installed CCTV cameras to control activities. Okay. Then information system and communication. Last, monitoring of controls. Okay. These are the 5 components. Then, what is control environment? Communication, enforcement of integrity and ethical values. This can be a separate question. The top-down approach means that if the people at the top level follow it, then the people below them will automatically follow it. Effectiveness of control cannot rise above integrity and ethical values of people who create, administer, and monitor them. That's an important factor. Fair. Competence is the knowledge and skills necessary to accomplish tasks that define individual's job, requires focus. Participation by TCWG and entities control consciousness is influenced significantly by TCWG. What are they like? How many are involved? Management philosophy and operating style, like Tata, is very strong. Reliance is a big thief. It encompasses, I didn't say that. Mukesh Ambani's children said it, not me. Now, next. It encompasses a brand, its broad range of characteristics like management attitudes and actions towards financial reporting. Organizational structure. It includes considering key areas of authority and responsibility, can be asked in exam. Number 2. Entities wrap risk assessment process. This is very, very important. What will you always say in this? All new things will be here. Everything here would be all brand new. Okay. What will you check in the entities wrap? So it's the same question in SA 315 in automated. In this, what will it be? New. That's new business, new revamped information systems, new business model, products, projects, new personnel, new technology, new accounting pronouncements. Okay, then changes in the operating environment, expanded foreign operations, and rapid growth. Read these 5 new ones, they make up 7 to 8 points. Same question, important in automated in 315 and in this chapter. Control activities. Where can you use control activities? Can be used for performance reviews, information, processing, physical controls, and segregation of duties. These 4 were for control activities. Check control activities because these 3 questions can be asked separately in exam. From the 3 wrap has the highest weightage. Okay, so whatever author's book you have, mark this as important. Then, next question is about 530 sampling and is forcefully put here. Next time teaching. Okay. Consideration of auditor to assess risk of material misstatement and responses to such risk. This is the 5th. Reading it again, consideration of auditor to assess risk of material misstatement and responses to such risk. Did you students get it? Such risk. We will discuss ROM in the SA 315 and discuss responses in the SA 330. There's a risk. We have to assess it. What do we need to do with the risk? We have to assess it. First, we need to write it full as per SA 315. Identifying and assessing risk of material misstatement. Identifying and assessing risk of material misstatement to understand the entity and its environment, what it says. As per SA 315, the auditor shall identify and assess the ROM, FS level, and assertion level for the class of TABD, meaning for the entire FS level as well as the assertion level and TABD. To provide a basis for designing FAB. Okay, to provide a basis for designing FAB. First, you will give introduction for SA 315. And then you will write these 4 points that are mentioned. Okay? Alright. For example, I think I forgot the name. It was Saurabh or someone who wanted to elope the girl away. So, identify risk throughout the process. Identify the risk throughout the process. To elope. Identify the risks throughout the process. To elope with her. Number 2. Assess the identified risk and indicate whether they relate more pervasively to the FS as a whole and potentially affect many assertion. Say, the girl's father. Supposedly, if they get to know that they have eloped, then his friends, family, and I would land up in some major trouble. And girl can change her mind as well. Delete the identified risks and evaluate. What can go wrong at assertion level? She was saying that I love you, you love me. My love. Okay, so she changed due to her father. To relate identified risk to what can go wrong at assertion level, taking into account of controls that auditor intends to test forth. Consider likelihood of mistake. Last night they caught my father, so had to leave and go. The goons caught my father. They caught me, my parents, and my whole family and called us out in front of entire town. Consider the likelihood of the misstatement, including the possibility of multiple misstatements. My mother told me that mother's love is true, but I didn't listen to her. There's law in audit. Whether potential misstatement is of that magnitude that could result in material misstatement. Whether potential misstatements of that magnitude could result in material misstatements. What's first? Elope with girl, identify risk throughout process and what mistake can happen, assess. Identify what can go wrong at assertion level, taking into account the controls that the auditor intends to test. Assess the identified errors, whether they relate pervasively to the FS as a whole. Meaning me, my brother, my mom, my dad, and my friends. Delete identified ones, see how things changed. And what can go wrong at assertion levels, taking into account of relevant controls that auditor intends to test forth. It changed, consider likelihood of misstatement, including possibility of multiple misstatement, and whether potential misstatements of that magnitude could result in serious material misstatement. Example, my entire family being called out. Now responses. So what will we say in the responses? The 2 lines would fill in by just our names. Auditor's responses to overall assessed risk. The auditor shall design and implement overall responses to address the assessed risk. In designing of the material misstatement. That's material misstatement. In designing the audit procedure, auditor shall consider the reason for assessment. Then read second, obtain more persuasive audit evidence. First, you'll check why you assessed the risk. That's important. Second, obtain more persuasive audit evidence. The higher the auditor's assessment of risk, more evidence needed for high risk. Done with 1 and 2. It's over. Okay. These are important technical questions that comes in exam. 6th question is, during your interim visit, you observed that internal controls were not in use throughout the period covered. Under audit state the control objectives that you would consider. Focus on control objectives. What is it? It's D Baba Te Mera. D Baba stands for detection and prevention of frauds in the books of accounts. Smooth conduct of business, adherence to CEO's policies, safeguarding of its assets. This stands for timely preparation of reliable financial information. Te is done. Next is Mera. M stands for monitoring of accounting. E is effectiveness and efficiency of operation. R is RAP. RAP stands for risk assessment procedures, and A is changes that occur in the account and internal control system during the period. This is D Baba Te Mera. What do you call these? These are your control objectives. D Baba Te Mera. You must keep the control objective in mind. Many students skip this question, but they don't know that it's important question. It's okay. Anyways, moving forward. Let's move on. Then, let's move to 7th question. Factors to be considered in development of overall audit plan. It's a request to pay close attention on this and remember it thoroughly because this question is frequent in exams. You can't skip this. I know it's technical. There is no other way out. You have to memorize it thoroughly because it's that important. Factors to be considered in development and overall audit plan. What does this say? It's your tea and masale. If you spot something in the lines of audit strategy or overall audit plan in questions, then it's tea and masale. T's terms of the engagement, T's terms of the engagement, and N stands for nature and timing of reports or other communication. N is for nature and timing, and M stands for materiality, setting of materiality levels for audit purpose. A stands for effects of new accounting and auditing pronouncement on the audit. S, significant audit areas. There's another A. It is reliance to be placed on accounting system and internal control. L is for applicable legal or statutory requirements. Legal or statutory. And E is for the nature and extent of audit evidence to be obtained. Nature and extent. All of these different key points are what stands for the tea and masale. T stands for terms of engagement and N stands for nature and timing. So if you are making a plan or strategy, then what are the factors do you need to decide? T and masale. M is materiality levels for audit purpose. A is effects of new accounting and auditing pronouncements on audit. S is identification of significant audit area. A is reliance on accounting and internal control system. L is applicable legal or statutory requirements. E is nature of audit evidence to be obtained. Nature and extent of audit evidence. Then, the factors to be considered for formulating audit strategy, the same question. Whenever the questions regarding audit strategy, answer is tea and masale. Then another question, 9th. Draw out the internal audit plan. Again, it's audit plan, which means answer is tea and masale. There's specific mention of manufacturing company, so you need extra points. How inventory verifications witnessed method of physical verification of cash and investment. Any records of wastages? Bifurcation raw material work in progress finished goods. Write something related. If it is a direct question, the answer is tea and masale. Tea and masale. Okay, then. Inquiry is different. No need, you can skip as a 500s question. Come to this question, we can solve this one. You can have such different inquiry in the exam. Okay, and what do you call this? The audit risk. It is the audit risk. How many types do they come in? Control, inherent, detection. What will we say about control from audit risk? There is no system in control risk. No, there is a system, but it does not detect anything. There's no detection. It's function of effectiveness of design implementation and maintenance of internal control by management. Which means it has system, but it's unable to detect. What does inherent mean? It does not have any system. Which means it's always at risk. Okay. D, detection risk. What does it say? It is. You can apply everything you want, but my audit procedures would not be able to detect anything from the risk. This is what you call as the detection risk. Audit can't detect. This is CID. It means control, inherent, and detection. Pencil got disconnected. Control, inherent, detection. Okay. Then, again, it is crucial. A very crucial question given here. Factors to be evaluated to assess inherent risk. What factors do you need to consider to evaluate inherent risk? It's done on two levels. One is at the level of FS. Another is at level of TABD. Transaction account balance disclosure. Write according to mentioned levels, otherwise write both. If asked at the level of FS, mention FBI pay. It is FBI pay. Okay, it's IM fun actually. Write it instead. I have wrote different codes at different places. The code word here is IM fun. Integrity of the management. M, management experience, knowledge and changes in management during period. F is factors affecting. Industry where entity operates. U is unusual pressure on management and is nature of entity business. IM fun. Integrity of management, its experience, knowledge. Changes in it during period. F, factors affecting industry in which entity operates. U is unusual pressure on management and is nature of entity's business. At level of account balance and transactions, where's that? It's at level of profit and loss balance sheet. The earlier one was at level of FS. So what will we say? There are 5 points. It's cast D. C, complexity of the underlying transaction. It can be risky. A stands for quality of the accounting system. Now S stands for susceptibility of the FS to misstatement. Next is T. Here T stands for transaction not subjected to ordinary processing. Next is D for degree of judgment involved in determining accounting balances. Degree of judgment. This is the full form of cast D. Okay? For those who don't have this answer, please copy it or take a picture. Cast D is an important answer. Assess inherent risk has two factors, at level of FS and at level of account balances. At the level of FS has code word IM fun and at level of account balance has cast D, 5 points each. But you have to learn answers by heart in assessment of control risk. It's direct question. So learn it well. Okay? Then comes assessment of Rome. Students, all these will come in the MCQs, all of it. Okay. Audit risk is the summation of control risk into detection risk into inherent risk. How do you calculate Rome? Multiply the control risk with inherent risk. Clear? So if you will ask what is auditor made up of, it is made of control risk into inherent risk into detection risk, correct? And the summation of this is called as ROM. ROM into detection. Okay? ROM is anticipated risk that material misstatement may exist even before start of audit. It has two components, control and inherent. Clear? And what is detection risk? It's a risk that material misstatement remains undetected even if all audit procedures are performed. It remains undetected. Keep it in mind. If inherent risk increases, detection risk decreases, and if the control risk increases, the detection risk decreases too. In simple terms, when inherent and control increases, detection will decrease. In simple words, inherent and control is inversely variable to detection risk. Shall I repeat? Okay, I'll say it again. It's inversely variable to detection risk. Clear? Then, if you want, you can mark this answer in your book as the risk-based audit, or in short RBA. This is an important answer. You can take the example of ABC. Okay? You do the same in ABC. If there's a high risk area, auditor would allocate more resources to that area. He will allocate less in area B and even lesser in area C. It's an approach to audit that analysis audit risk, set materiality thresholds. Based on the audit risk analysis and develop an audit program that allocates larger portion of audit resources to high risk areas. It's essential element in financial audit, both in audit of FS and financial systems. Here it is saying that it's used to evaluate the internal control system. It'll suggest and hint towards the areas which will be requiring improvement. Is that clear, students? So the definition of RBA is important, and it has 3 steps in it. Let's see it. Here it is. It's of 3 steps. Risk assessment, risk response, and reporting. All of it has R. R risk, R response. R for reporting. So it is 3 RS, RRR. Now let's explain each of this RRR in couple of lines. You'll find this in module page number 3.12. You have to study the risk assessment separately, as it is very important. Okay then. Explain this in one line: assessment, response, and reporting. So the risk is spotted and the response is reporting. Assessment, response, and reporting. This is from module page 3.12. Risk assessment has appeared individually in exams, so you have to study it. Write in risk response. This phase of audit is to design and perform FAP that respond to assess ROM and will provide evidence necessary to support audit opinion. The final phase of the audit is to assess the audit evidence obtained and determine whether it's sufficient and appropriate to reduce ROM in the FS to an acceptably low levels, because we can't go till 0. Risk assessment, risk responses, reporting. RAP 1 is important answer. RBA, risk-based audit. Then, next common answer that you'll get for internal control. Common answer for internal control or check system. It can give example of anything. It can give you various examples from different places like amusement park or a theater. Here I have used code names for you to remember. चंदू के चाचा ने चंदू की चाची को देखते देखते सबके सामने आके भगाया. It means there should be no individual control over one transaction, whether it's theater or amusement park. You can use this to make up common answers. Persons having custody of assets BOA must be different. Attention must be given to transactions by having automatic cash registers. Employees should be encouraged to take leave at least once a year. Duties must be divided nicely. It must change without prior notice. Different units people must do stock valuation. Assets should be safeguarded. Accounting procedures and budget should be properly followed. Once it becomes common, link your answer to the question. Is that clear? You can read the flowchart techniques in your book. This is question from IPC level, though I don't know if it would come in exam. It's one of many techniques for evaluating ICS. It's a graphical presentation, not a descriptive one. So, make a graph or diagram. Do you remember? During childhood, we made left-right. Graph. Remember it? That's graph. Read the flowchart. Read the 16th question here. On screen. While commencing audit of ABC Limited, auditor undertook ROM and found detection risk related to certain class of transactions that cannot be reduced to acceptable level. Explain. This is logical. Just write Chandu ke chacha base as I've taught. What's the question? What did we do? We started the audit and did risk assessment and found that detection risk related to certain class of transactions cannot be reduced to acceptable low level. Explain. It's clear. Will you write the name first? Write as per SA 315. Identify and assess risk of material misstatement in FS and non-basis till the SA 315. Explain risk assessment and the detection risk. Copy the question as it is. Audit risk is a function of ROM and detection risk. Then, define ROM and define detection risk. In detection risk, even if you put efforts, but what happens? It can't detect. Auditors cannot be reduced to 0. Performing detailed audit process can reduce risk to acceptable low level. There is always an inverse relationship between the ROM and the detection risk. Clear? Keep it in mind. We have stated it. If we want to reduce the risk, what should we perform? Substantive audit procedure, where the auditors will become lower. On basis of ROM, if auditor finds that detection risk related to certain classes of transactions can't be reduced to acceptable low level, some material misstatements may remain undetected even after performing substantive procedures. Modify opinion as per 705. I should try alternate procedure, but if it's still not possible, what should you do? Modify as per 705. Clear? Modify it. So start with writing the name. Then define the ROM and the detection risk. Risk can't be 0. But you can reduce the risk by performing the substantive audit procedure. If it's still not possible, try alternative procedure. If still not possible, modify as per 705. Okay? It can be reduced to an acceptable low level but cannot be made to 0. Read this once. You have 2 minutes. To read. Go ahead. If it's a planned answer which is a code, then use T and masale. And in control objectives, you have to use debabate mera because it has pointers. It's undescriptive. Copy the codes for the questions with risk mentioned in it. Done? Then draw out the audit plan for evaluating the reliability of controls. So it's only for reliability of controls. So whether the control is the same as how we evaluated, the control is in place and functioning as desired. What you have to check. So check the generality of the specificity of the control. I have installed CCTV to cover everything in general. So suppose you installed a lock on your door or your cabin and you can only have the access of your cabin once you open that installed lock. And I have the password to open that lock in my laptop. So it's a general control. Let's assume that there's a lock installed for your office tally with different password. So that is a specificity. So this is what you call as specificity. Students, I hope it's clear. How many types of control we have? Preventive, detective, corrective. Preventive stops everything including antivirus. Detective identifies errors, irregularities after they occur. It will tell the errors. Fire detector has smoke alarm. Corrective removes the effect of the errors and any irregularities after they have been identified. It corrects. Like body's antibiotics. Okay? And further, the auditor should ensure that authorized complaints and correct data is made available for processing, ensure accuracy and completeness of output. Prevent unauthorized amendment to the programs. Provide adequate data security and safe custody of source code of application software and data files. This is technical, so memorize it. 3 types of controls are preventative, detective, and corrective. Check for the control, if it's as we thought. Generality versus specificity of the control. Further, the auditor should ensure these 5. Okay? Then this is a sample answer. We will use as a 530 here. We'll study that when the time comes. Move to next question. Areas for deficiency and risk identification in CIS environment. It's computerized information system. You can call it as spoke or COPS. Start with writing completely as per SA 315. Extend this identifying and assessing risk of material misstatement to understand entity and environment. Auditor must make assessment of ROM. ROM is risk of material misstatement. In CIS environment, where can risks arise from and where can errors occur? The first point is, you can call it as a spoke or COPS. CIS security. Control over specialized utility programs. O is operations including processing of data. It's tricky. P is program development and maintenance. S is system software support. These deficiencies tend to have negative impact on all application systems that are processed through computers. Earlier there used to be CIS questions. At the end, this question is not related to CIS. Again, there can be a risk. Fourth point is physical CIS security. The issue could be physical CIS, like someone stole the laptop. Control over access to specialized utility programs. This gives access in main software. O is operations include processing data. How is it processed? And it is also open to risk. P is program development and maintenance. Is it updated or not? System software support. These deficiencies tend to have negative impact on all application systems that are processed through computers. Then, discuss briefly the various stages of a risk assessment process. This question is similar to automated environment. The question is same, okay? So the answer will be same in RAP like automated environment. Answers similar to automated, solve it now if you want. RAP is critical component of ERM, enterprise risk management. It involves consideration of qualitative and quantitative factors. Definition of key performance risk indicators, risk appetite, risk scores, scale maps and more. How much is the syllabus for CA? Then how many chapters can we skip? How many marks did I get in the mock paper? You have to cover benchmarking. Various stages in RAP are define business objective and goals. Identify events that affect, like wedding. This is identify the events that affect achievement of business objectives. Assess the likelihood and misstatement. This is the bride's father. Assess likelihood and impact. That is, bride can be replaced. Respond and mitigate the risk, test the groom. If the bride is replaced again, then apply assess residual risk. We have discussed it same as automated environment 1. It's very important. Done. So be with me every day till Sunday for 2 hours. However, on Sunday, we'll study for 4-5 hours. On Saturday too. Okay. I'll cover 2 to 3 topics every day. You'll catch up. We are starting from Monday to Sunday. So from Monday, Tuesday, Wednesday, Thursday, Friday, that's 5 days in total. I will cover about 13 topics in these 5 days. And in standards, we will roughly cover about 15 to 20 standards. Is that clear? Yes, everything's on YouTube. What should we do? We have a fixed slot for 10:30 to 12:30. On Sunday, it'll from 9 a.m. 9 a.m. onwards, let's see how long it will be. What should we do now? You can take a break. Have your meal. Later this afternoon or evening, we will discuss quickly about 2 to 3 topics that I have taught you today. Hi guys, what's up? Today we will revise investigation and due diligence. Take out your books. We are going to do investigation and due diligence. It's a very easy topic, a common chapter. It can be revised quickly. This is our revision session with regards to keeping in view of the fact that we have exam. For regular classes and for fast track batches, you need to visit www.letslearnindia.in or call on this number. Let's start. We will discuss 2 parts, investigation and due diligence. First, see due diligence. If you have my notes or if someone has learned from another teacher, please take out their book. So let's quickly recap due diligence first. Okay. So, when does due diligence happens? When there is amalgamation, demerger, merger or corporate restructuring, we perform due diligence. What is the importance of due diligence? This could come in exam. To confirm that the business is what it appears to be, it should be as it looks. To identify deal killer defects in target company. Let's assume for the exam that we are acquiring Zomato. So guys, we are acquiring Zomato. And it is our target. I will be an acquirer. You must have done in FM acquirer, acquiree. Acquirer target, right? To identify deal killer defects in the target company and prevent a bad business transaction. Sometimes what happens in target company is that such issues may arise like unpaid taxes or outstanding loan. These would be defects for the deal, so it should be identified. To gain information that will be useful for valuing the assets, defining the representations and warranties and negotiating price concessions. What will be the benefit of DD? You will get the fair valuation of assets. defining the representations. Then we will get equal share of valuation plus. Buyer says they want to buy cheap, seller says they want to sell expensive. It will be helpful for us there to verify transaction matches with investment or acquisition criteria. This is the importance of due diligence, 4 points you need to write. Next is contents of DD. Code for contents of DD is CPT file. What is the code? CPT file. C stands for commercial DD. P stands for personnel DD. T is for tax DD while F is for financial. Furthermore, I stands for information system due diligence, L is for legal, and E is for environmental. Commercial or operational due diligence personnel. Tax, financial, information, legal and environmental. What will be the benefit? In commercial aspect, we will know about operations to see if targets operations are as they appear. For example, books show 10 crore in turnover. So, is the turnover accurate or not? To check if the target is commercially feasible. Financial DD to evaluate financial viability of target company. Next comes tax due diligence to check whether the target is paying taxes regularly, both direct and indirect. Information system. For example, your MI system provides right information to right management at the right time at the right place. Legal. DD, whether target is complying with all applicable laws and regulations. Environmental DD to check whether company is complying with all environmental laws, regulations. Personal DD, whether personal policies of the target company are appropriate or not. My code is CPT file. Okay. This is second question. First was importance of DD. Now it's classification or types of DD. The third point. Generally this comes in exam. What are areas covered in financial due diligence? A brief history of the company and its promoters. What is the accounting policy, MIS and also cash flow? Cash flow pattern, asset, liabilities, income, expenses. Then we should read the chapters of FM. Cost of capital, the ratio, investment decisions. You have to write your answers in point form. What are the areas covered in DD? If 5 or 6 mark question comes up in the exam, then you will explain it line by line. And what would be the next point? The main heading would be areas of due diligence. Then you would explain each line under this heading, point by point. Okay. Next, see content of DD. What would be in contents of DD? Code is TOBA CPPT file. What would you say? TOBA CPT files, terms and scope of verification. O stands for objective of DD. B is for brief history of company and promoter. A is assessment of CPT file. Then S stands for SWOT analysis, whereas the E stands for executive summary. TOBA CPT files. What are the areas of due diligence and what are the contents of due diligence report? Okay. The answer for work approach is the RTP. It stands for read if time permits. Okay. Conducting DD. This can come in MCQ. 3 phases. Pre, during, post. Pre, during, post. What comes in pre? Discuss with the client to understand the transactions. Number 2. Assessment of the most appropriate scope of work is required. What needs to be checked? What is your reason for buying and selling? So we will set up a centralized table for our team. Preparation of DDR list to target specific areas. If it's manufacturing company, we will check manufacturing aspects. If it's trading, check trading aspects. If it's edtech, we will check according to the startup. DD and negotiation process. To start work, but how to do it? We will work on other site. We call it on-site when we work at some location. When we are in office, it's off-site. Is this flexible approach? We are not auditing. We are not investigating. What are we doing? We are checking if this given worth of 1000 crore is true or not. We are simply checking this. So you don't need to be so strict, be flexible. The question and answer process with the management will be different. We need to ask the management, how are you getting these sales? What is profit margin? What is EBITDA? What is the net profit? What are the ratios? Then for negotiation terms, we'll come up with reason like this is a liability, it needs to be deducted. Your price will drop. Closing, post-closing process. Guys, do remember that the seller would always want to sell at a high price. Buyer will always want to buy at a low price. We are mediators, we are DD experts, so we have to come in the middle. We have to manage both the parties and their requirement. Clear? We have to manage between both requirements. We have to close deal at mutual understanding. Preparation of review of closing documents by the target, review of other post-closing transactions, and involvement of a price adjustment procedure. Contents of due diligence. It's pre, during and post, pre, during, post. Okay? So I'm giving you 5-7 minutes. That's all the content in DD. 2 answers are very important. Content of the DD report and section on areas covered in financial due diligence. The 2 questions we have to see question bank, we will do those later. In the meantime, quickly go over this and recall what we just covered. I will slowly scroll through the screen. Okay? Is it done? Now there's a TYU in the module. Let's do it here as well. This is a question. Okay. So I'm giving you 2 minutes to read the question. I will ask you. Take your own time to read question. It's on the screen. Okay. I think it was mute. Sorry. So I just said that he's trying to do what? He's trying to SWOT it. Strengths, weakness, opportunities, threats. What are they trying to do? To get strengths, weaknesses, opportunities, and threats. What is the strength? Rise in sales generation and cash profit. What would be weakness? The lack of well-paid qualified staff could be a weakness. What is the opportunity? When they are going to the export market. Threat could be lack of presence of large number of competitors and slump in demand in US market. What is that? It's threat. These questions, if they come up in the exam, will be scoring for you. But there is no such question in the module. Check entire module, you won't find it. You will say paper is out of syllabus. No, it's not. It came from this book. TYU is in your main book, which contains questions from module. I divided them into 2 so that there is no burden. So your DD ends here. Now let's move on to the investigation part. So what is this about? Investigation and due diligence. It's very simple. Investigation and audit. Investigation and audit. So what's the difference? Investigation is done by an investigator while auditing is done by an auditor. Investigation includes depth while auditing is sample based. Any expert is needed in investigation. Auditing needs any CA. While in investigation we establish facts and in auditing it's opinion. Any CA can do investigation, whereas in auditing it's mandatory for companies. Okay? And auditing is mandatory for the company. In investigation, it can go beyond the books. In auditing, it checks financial statements and books. It covers financially, non-financially. Audit does financial aspects. In auditing, we call it persuasive. On the other hand, in investigation, it's called conclusive evidence. It's very easy to distinguish. You can read it directly. Read it. Now see, types of investigation that was once part of law has now moved into the self-paced. Now this type will be in non-statutory. Now let's see what is this investigation on behalf of the incoming partner, and this comes in the exam. Another question comes is investigation for valuation of shares in a private company. Okay, so rest of it will be in the majority. The common answer I'll show you now what it is. We are looking at valuation of shares, and there are two approaches, net worth and yield approach. Now with the net worth approach, we take total net worth and divide it by the number of shares, we get an amount. This is called the net worth approach. Okay, now under the net worth approach, let's see. In this, don't do anything. Each asset should be valued at its replacement cost. Amount of goodwill will have to be based on future maintainable profit, should be included in the amount of the net worth. Yield approach says that investigator will have to estimate amount of profit the company will make in future, and portion that will be distributed as a dividend. Next, either do net worth or yield it or divide it by 2. What do we call this? Fair value method. What do we do in this? Net worth plus fair value plus yield divided by 2. You will get the fair value. When large number of shares are being valued for transferring ownership, separate value is charged for the control and added to value. Either net worth or yield is used. Sum of net worth and yield is divided by 2. It's given in module but very rare. Okay. Next, investigation behalf of bank proposing to advance loan to company. It's a common answer. Then investigation on behalf of an individual or a firm proposing to buy a business. Okay. Other answer comes up, investigation on behalf of an assessee, desirous of disclosing his income that escaped assessment. It's about income tax. If there is question about income escape, there are two parts. One has accounts maintained and another where accounts are not maintained. If accounts are not entered in the books, how will you check the escaped income? So what do we need to check? See bank statements. Check standard market rate for GP and review wealth statement. Make sure data is efficient. 4 points are given. Bank wealth statement, normal rate of GP data produced. Okay. If the accounts have been maintained. What is it saying? Income has escaped. The income has escaped. This means the profit has not been shown or less than the actual has been shown. How can profit be less? It should have been 100 but you showed 10. What is it? Expenses are increased. or figures here are lower, there's nothing to be done about it. Understatement of sales, inflation of expenses and undervalue of closing stocks, overvaluation of opening stock, good debts being written off as bad debts, omission of profitable transactions, hiding of other income source. Will tell you the preparation of balance sheet, and this is the definite answer. It's important. It will be 3 to 4 marks. Next, what is common answer? Preparation of condensed income statement. Make P&L account or make the balance sheet statement for the last 5 years. Showing separately income and expenses, gross net profit on, taxes paid each year, computation of relevant ratios. Whatever you want to write, ROC, ROI. Debt equity and debt service ratio. Write them down, 4 or 5 ratio. Then annual sales, income, expenses and liabilities. Okay? This is your common answer. Easy, right? Then, next you will find an answer in your book. Next question is, what factors should be considered for assessing the turnover of a company? What do we call it? TMC party. What can we call this? TMC party. What does T stand for? Trend. Whether past sales have been consistently increasing or fluctuating, a deep study of this phenomenon should be conducted. T stands for trend. M stands for marketability. Is it possible to expand sales into other markets? Or that the markets have been completely exploited? Marketability. P is political and economic considerations. R policies pursue if government is likely to promote extension of market for goods to other countries. Whether sales in the domestic market are likely to increase or decrease as a result of emerging trends. Competition. What is the likely effect of the business on the if manufacturers or new competitors enters into the market? So what will happen to our sales in the competition? You will have to write TMC party. Trend, marketability, political, economic considerations and competition. Core issue is TMC party. Trend, marketability, competition, political and economic considerations. Then, what factors should be assessed for working capital? What are we going to check in terms of working capital? Okay. Remember the working capital cycle from FM. Is ratio of inventory to turnover been increasing? And if so, is this continuing or temporary trend? Are trade payables being paid on time or is there a backlog? When you discuss trade payables, it's trade receivables. What is the cycle of trade receivables? A simple question. And what is the cycle of trade receivables? What will be the effect of inventory? Trade receivable, trade payables if turnover increases or products introduced. After inventory, trade payables, trade receivables, and what do you do for 4 points? Sum up all 3. What's impact on inventory, trade receivables, payables if turnover increases or if products introduced? Answer for working capital. Then someone told me that this came up in the MCQ in current year's attempt. It's fraud diamond. It's called the Corey diamond. I hope this is clear. Why would I commit fraud? What are the elements of fraud? Why would I do fraud? Because of Corey. Capability, opportunity, rationalization, incentive. Capability refers to the ability of someone to commit fraud. Imagine I am the Don here. Then I have the capability to do any fraud or crime. Next is the opportunity. No one will know anything about it. I will manage. Opportunity. Rationalization. Now I have convinced myself that in life, in order to become a great person, you have to do everything. What is rationalization? Incentive. Some people have habit of doing unlawful things with bad intentions. That is called as incentive. Therefore, this is 4 diamonds. Fraud, we call it Corey. Capability, opportunity, rationalization, incentive. Okay? You will read these 3 answers. 9, 10 very repetitive. Read. Read. Next comes your indicators of fraud. This is essay 240 question. Basically, it's our code ducto. This module has it all. Let's quickly see ducto. Indicators of fraud. It's discrepancies in accounting records, including non-recording and partial recording, or other record discrepancies in accounting records. Unacceptable management response. And this person is not available. You can't go there. There's something wrong going on. There are no books, no papers, and bill also not available. Then conflicting or missing evidence, including missing and other documents. There is whitener on the agreement date. Some words are missing there. The amount is missing. So we call those what? Conflicting or missing evidences. Techniques, unwillingness to address deficiencies in internal controls. Other indicators, accounting policies that differ from industry standards. You follow other industry practices, they follow another. So the code here is ducto. Discrepancies in accounting records. Then unacceptable management term. Responses like denial of access to records. C stands for conflicting evidence. T stands for techniques, that is unwillingness to identify deficiencies in internal control, and other indicators as well. And this is important because SRE is important to us. It was taught in separate channel. So you don't need to read this. Just read the ducto, the indicators of fraud. Ducto. Mark it in your book, in the module and the teacher's book. Mark it. This should be done immediately. Read it once. Is it done? Good. Then in question bank book, there is one question about investigation. I will do that. This one. It's very important question. It's already written in the question book on page number 302, question number 2. This question is not covered in the main book. So whenever I teach, I do this. It is very important to do this. It's very repetitive. Your client is contemplating taking over manufacturing concern and desire in course of DD review. He looked specifically for hidden liabilities, overvalued assets. The two questions are hidden liabilities and overvalued assets. Either both are asked together or asked separately. Therefore, first we will talk about what? Hidden liabilities. What does hidden liabilities mean? For example, a company may not display any show cause notices, such as an income tax order or GST order. Okay? If a show cause notice is not shown, you will not even know there is a liability. It's not shown in booking. Next. Company sold some subsidiaries, businesses may have agreed to take over those liabilities. Now we have sold a subsidiary to a client. And then inform the person to whom you sold that any liability which is older than 5 years will be taken care by us. This will never be shown in the books. When the liability arises, then it will come. Company sold some subsidiaries and they have agreed to take on any liability, indemnify liabilities to buyer. Next. Product liability claims, warranty liabilities, returns, discounts. If a batch is defective of a laptop manufacturer, then the entire batch is defective. Liability is also ruined. That will not be found in books. Tax liabilities under direct, indirect taxes, notifications are not yet available to us. But liability will arise. That is hidden liabilities. And it's very easy. If we talk about taxes, I can talk about sales tax assessment. I can also talk about customs. Customs duty assessment, then direct and indirect tax. Just mention the sales tax and the customs. Then if there are any future lease liabilities, unfunded gratuity, superannuation leave, these are liabilities and employee with liability. Then there are huge labor claims, contingent liability not shown in the books. Liability is very easy. You can write few points from your mind and write the answer in point form. Hidden liabilities. Then comes overvalued assets. What does overvalued assets mean? Uncollected or uncollectible receivables. Debtor is 100 rupees. Okay? And while the books showed it as 1000 rupees, now you can see that 900 won't come from 1000. So, uncollectible or uncollected receivables are being shown forcefully in the books. If obsolete or slow moving inventory is displayed, balance sheet will seem stronger on the asset side. Asset carried at much more than its market value. Okay? Because of the fluctuations in the foreign exchange, litigated assets, and property, underuse or obsolete plant and machinery. Investment done despite market value was significantly lower. Similarly, investment carrying at low rate of return, giving 1 or 2%. Infrastructure and differ from revenue expenditure. Your intangible assets have no value, and group company balance will be under reconciliation. Remember 4 to 5 minutes, which are easy. See why an investment would be made at such a low value. At market value, where the value is much lower. Is it clear? Investment carried at very low value or low income or return. Then default revenue expenditure, intangible assets with no value, group companies consolidation, group company balance under reconciliation, then uncollected or uncollectible receivables. This is answer. Okay? Clear? One second, checking if there are any other points. In question bank, answer would be the question about the cash receipt embezzlement. Please do it. Cash receipts and the embezzlement. Done? This is finished. So we have done with the investigation and due diligence part. Okay? We will be doing the next chapter later. Bye guys, take care. Try to aim for a rank or 70 plus. Bye, take care. God bless. Hi guys, we are revising forensic accounting right now. Quickly come to forensic accounting chapter. What is forensic accounting? Forensic basically means suitable for use in the court of law. Whenever there's any fraud, any kind of financial fraud, then what do we do in that case? It's forensic accountants, not auditors. This is because it's common practice to call them forensic auditors. Previously, this was called forensic auditor. Now it's forensic accountant. Wherever we called forensic auditing, it's forensic accounting now in every place. First topic is forensic accounting. It's an integration of AI. The term is AI and it's called as accounting, auditing and investigative skills. It's integration of accounting, auditing, investigative skills, study of interpretation of accounting evidence. It's application of accounting methods to drag and collect. Forensic evidence. Usually for investigation, what should we do in investigation? Criminal breach, we will take him to prosecution and prosecution of criminal acts, embezzlement or fraud. Sometimes it's referred to as forensic auditing. Forensic accounting and forensic auditing both mean the same thing. Right now, we can use the term forensic accounting everywhere, okay? What is meaning of investigation? It means to go deep and check. Therefore, it is basically examining documents and interviewing people to extract the evidence. Examining documents, interviewing people to extract evidence. What is fraud auditing? A fraud audit is basically not an investigation. It is used to identify fraudulent transactions, not to figure how it's done. What we do in fraud auditing, we check if fraud has taken place or not. We don't need to investigate. Okay? Red flags. What does a red flag mean? These are the signs or warnings of an impending danger or inappropriate behavior. These are signs or warnings of impending danger or inappropriate behavior. We were not told that there was danger. They do not indicate existence of fraud. However, these are the indicators that caution needs to be exercised while doing the investigation. The types of fraud are FABO, financial, accounting, behavior and operational. Financial, accounting, behavior, operational. Financial, accounting, behavioral, operational, financial performance, red flag. Accounting system, red flags, behavior, red flags, operational, red flags. Okay? Out of these 4 definitions, which one is relevant for exam? The red flag. This could come in exam. Okay, please read. Then next. The next answer is important and repetitive. What's difference between forensic and other audits? You can consider other audits as base. Opposite is forensic. In other audits, it's true and fair view. Giving opinion. While here we see if fraud took place or not. It's substantive and compliance approach while there is investigative approach. It's sample based while this is in depth checking. Then this is generally covered for accounting period, no such limitations here. We rely on management for data, while here you have to put effort in forensic. What we do here, we check arithmetic accuracy and compliance with procedures. Here the propriety, regulatory and propriety of these transactions are checked. Issue negative or qualified opinion here, while legal determination here, if there's fraud, then pay penalty. Important repetitive answer, it should be forensic versus other audits. Do it again one more time. Quickly. Is it done? Now moving ahead. What is next answer? What are the services provided by forensic professional? This is another exam-oriented revision. Let's quickly recall the content. A question may comes that if you are forensic expert and you have a client, what services will you offer? Crafting questions to be posed, responding to the question posed, then identifying documents to be requested, identifying individuals who have knowledge of the matter, conducting research and relevance to the facts of the case, identifying and preserving the key evidence. Remember these 6. Crafting the question to be posed, responding to the question to be posed, identify documents and identify individuals from whom knowledge can be obtained, conducting research relevant to the case and identifying preserving key evidences. Next, analyzing produced records, information for facts, or identify other means to obtain key facts. Remember these first 6 and remember 2 more. Okay? What are the characteristics and skills of forensic professional? Characteristics means character. Okay? What is your character? Skills, subject. How will you remember it? Your perspective, way of thinking. And the skills will be the subjects. Hence, you may get this question in the MCQ to identify what are skills and character. Out of the box thinking, all the attributes will come. It includes curiosity, inquisitiveness, persistence, strong visualization, imagination, detail orientation, discretion, sound professional judgment. What skills will be covered? All the subjects like auditing standards and procedures. Then, accounting business reporting system in accounts. Also, there is IT system legal framework. Data analytics is important, criminology and evidence gathering. Okay. And network of professional contacts in the related field. I hope this is clear to all. In exam, either characteristics or skills can come. This could also be asked in MCQ to identify. How to remember it? Personal attributes, which are your characteristics. And what does S stands for? It for subject. Skills and subject. Read it. Services rendered, characteristics and skills. Read it. Now, what is the process of forensic accounting? This is important. Firstly, heading are very important. Initialization. It means we went to the client and asks for information. Then we made a plan discussing how we could approach the situation. This process is called developing a plan. Then we attacked. First, we gathered relevant evidence, obtaining relevant evidence. Then we performed analysis, performing the analysis. Next, we made a report, and in the end what will come will be court proceedings, because we will have to go before the judge and explain the fraud so that the person should be punished. There are 6 steps, headings, and it's very important. First, what comes is initialization, then number 2 is developing the plan. Then you gathered evidence, obtaining relevant evidence. Then you attacked, which means performing the analysis. Post-analysis, it became clear that fraud had occurred. We made report and explained it in front of magistrate. We call it court proceedings. Next, how to do analysis. This is separate topic for exam. LERTPC. What will you say? LERTPC. Generally, a forensic accountant analyzes the following areas. LERTPC. Summarizing large number of transactions. E stands for calculating economic damages. R is performing regression or sensitivity analysis. And what stands for T? Tracing of assets. Performing a tracing of assets. P stands for present value calculation, utilizing appropriate discount rates. Utilizing computer applications like spreadsheets. Utilizing charts and graphics to explain LERTPC. Okay? L is large number of transactions. E is economic damages. R is regression analysis. T is tracing assets. P is performing present value calculations. C includes 2 computer applications like spreadsheets, databases, computer models, or utilizing charts. Okay? So these 6, meaning these 6 steps, in them a performing analysis is separate answer. Then comes reporting answer. We will read reporting separately. We will do it later. Okay guys? Process of forensic accounting and LERTC. This is asked in exam twice. Hence this is the answer for analysis. Okay? And now, let's look at next question. How as a forensic professional you will report, state the contents. Clear. Issuing audit report is final step of fraud audit. Now orders will include information that the fraud has been found, if any. Report will include what all? Findings, the summary of evidence, the conclusions, loss suffered, and to identify those involved in the fraud. Now instead of writing the answer, what did the institute do? Answer has been updated and is given below. What are the elements of the report? What are elements of the report? So what should we do? Use little from here. Forensic professional should have strong active listening skills that will allow him to summarize the facts in the report. It should be kept in mind that report should be based on facts collected during process, not on opinion of person writing report. Next, this and this paragraph is completed, and this is elements of the report. Alright, so what will we say? What we just taught you, right? Now you use the CPT file and use TADAP that you studied in SRSAE. If this comes in exam, what are the contents of a forensic report? What would you say? The title, addressee, distribution. Furthermore, letter O stands for objective and scope. B is for broad work procedures. V is a brief history. Then E stands for executive summary. It's summary SWOT and executive summary. Reference to use of expert. Then FAC. What will come in this? List of findings, assumptions, limitations, disclaimers, conclusions. Key elements of the report is new answer. It's likely to come in upcoming exam. Okay? There are chances that it will come. What's this? The first is title, objective. Then background of the, you can say broad work procedures. And executive summary. Reference of the expert, if any. FAC, there will be list of findings in this. Assumptions, limitations, disclaimers, and conclusions, if any. Hence, these are elements. Then next, you will see answer to the assumptions and limitations. There's a question on assumptions, limitations in module, so this has a high probability of coming in exam. Hence, professional should list down any assumptions made during the assignment that significantly affect the subject matter. When I work as forensic professional, I might make certain assumptions. I would have to list assumptions in my report. In addition, we may encounter some limitations, like don't check this data or don't go there. Check some samples based on the details, don't check details. So, limitations can be expressed as management restricted or denied access to people's records and information. Due to any reason, maybe there is court order or short timeline or a flood, maybe there has been a flood, anything is possible. So all these would be covered in the report as disclaimers. Report should not express opinion or pass judgment on guilt or innocence. We won't say that he is innocent or guilty. We will say if he is fraud or not. We need to tell reason. The determination of culpability is the final process of the court. It's complete judicial process depending on specific situation under review. Report highlights circumstances or fact that may aid as a stakeholder decision or further civil criminal investigation. So you can say the entire circumstance. Whether there was fraud or not, guilty or not guilty, that is for the court to decide through the judicial process. Okay? This assumption can come in the exam. Read this about assumptions, limitations. It's important. Then FAIS, Overview of Forensic Accounting and Investigation Standards. FAIS are Forensic Accounting Investigation Standards. First answer would be what are the pillars? This could come in MCQ. First is Basic Principles of FAIS. Key Concepts, Standards, FAIS, Guidance. Basic Principles of Forensic Accounting Investigation, Key Concepts, Standards, FAIS, and Guidance. These are 4 components that form framework of forensics. What is the benefit of FAIS? The professional with the minimum standards. There are no standards yet. Academically, practically, it's announced but it will take 2 years to implement. Eventually, it will be there. Professional with minimum standards for undertaking forensic accounting. Forensic accounting and investigation assignments. For example, there is a standard that we do auditing. There is standard and we follow it. There is separate guidance for tax. So this will give professional basis what needs to be done. They will know the basics of how to approach it. And that uniformity will be followed. Because in today's scenario, every individual is doing things in their own way. Uses of FAI services will indicate quality of service from such an engagement. The quality of the audit will improve. Then regulators, government agencies will have appreciation about expectation from FAI services. Department, government, income tax, GST, whatever investigation is being done by the forensic, even they will understand what we can expect. And to everyone, guidance on implementation on practical issues. We'll be able to get guidance on how to do this and how to do that. This is benefit of FAIS. What FAIS are given? There are a lot of FAIS, series of 100, 200, 300, 400, 500, 600. So this may come up in MCQ. So you need to pay attention to it. There is gap of 10 each. 100 will be heading. First is key concepts. NFLA, in this its nature of engagement. Fraud risk, laws and regulations, applying hypothesis. What assumptions are we making? NFLA. Heading is 100, then 10, 20, 30, 40. Nature of engagement, fraud risk laws, applying hypothesis. Then standards on engagement management. Now we will be looking at everything related to engagement. Engagement objectives, identify for MCQs. You may be asked to give any 5 FAIs. It's rare probability 5 FAIs will ask in exam. What will we do? Start by remembering NFLA because last one is easy. This is all related to engagements, engagement acceptance, export, engaging with agencies, engaging stakeholders. Then 300 series, this asks how to do work. So planning, evidence, work procedures, conducting interviews, standards on executing assignments. Then standards on specialized areas applying data analysis, evidence gathering in digital domain, loans or borrowing. 500 series is standards on reporting while 600 series is on quality control. What will in 600? FAs, 610 on quality control. Heading is 100, 200, 400, 500, 600. Gap of 10 is in each standard. In 400, it's 410, 420, 430, then 500 and 510. 600, 610, okay? This is called FAIS. FAIS is also important. FAIS and process are important. LE, RTP and reporting are also important. Assumptions, limitations. The answer will be auditing versus fraud, distinguish. Forensic distinguish. That's different topic and could come in exam. Clear? Here I have revised your forensic chapter. The questions from the question bank, the questions behind the module TYU and solve them first. Test yourself TYU questions. Okay? Bye guys, take care and enjoy. Aim for a rank or 70 plus, whichever comes first. Goodbye. Hi guys, how are you? I hope you all are enjoying revision sessions, one-shot revision YouTube videos that are out. And if you like it, do share with your friends. I have created a complete playlist of one-shot revision. Share this with your friends on different WhatsApp groups and also on Telegram groups. Okay? Today's chapter that we will study is internal audit. Generally, people skip this chapter, but you shouldn't. It's a chapter where you can score easily. And there are some answers that are very repetitive, so we will focus on those carefully. Okay? Now, guys, listen to me. I want to make a disclaimer. This video recording is for our exam. It's an exam-oriented revision. Okay? And guys, this is a quick recap of the concepts. Okay? Now, if you have a brother, friend, or anyone who is watching me and has an attempt in the future, like 25 or 26, and you need the lectures, then you can see website link below. Our website's name is www.letslearnindia.in, www.letslearnindia.in. Or you can call the number that is flashing on the screen, 844-844-8919. Okay? You can take lectures from there. Let's start. This is a very short and easy chapter. I think we can finish it in half an hour or 45 minutes. Okay, let's start. The chapter name is internal audit. In India, there are 2 types of audits, statutory audit and internal audit. Statutory audit, what does it mean? Mandatory, that means compulsory. Mandatory, compulsory. Who does it? The statutory auditor. CA plus COP. What are we talking about here? Internal audit. It's not applicable to everyone. It's applicable to whom? Statutory audit is applicable to all companies. Internal audit is applicable when a company section 138 is applicable. What's in this? So section 138 is applicable. Clear? And it's applicable on what? It is applicable to every listed company. Then it's applicable to every unlisted public company and on every private company. It applies to all three. To the listed, public and private companies. Listed, public, private applies to all three. Directly applicable to listed company. When we talk about public companies, we have to check this code DPLETU. Okay? What is the code? DPLETU. D stands for deposits. P is for paid up capital, L stands for loan, and T stands for turnover. P is paid, L is for loan, T for turnover. Deposits, paid share capital, loan, and turnover. What is the data? What is data? 25, then 50, then 100, and 200. 25, 50, 100, 200. All the figures are in crores. Deposit should be above or equal to 25 crores. Minimum of 25 crores. Paid up capital should be minimum 25 crores. Turnover should be 200 crores. Whereas what is the loan figure? That loan figure is exceeding 100 crores. That means it should be more than 100 crores. You have to keep remember loan figure will be exceeding 100 crores. So these conditions are our conditions, meaning from the four, if any attracts, you need to have internal audit applicable. Remember that the paid up capital and the turnover, you have to look at last year, March 31st. However, the deposit and loan figures, you need to look for those at last year's. At any point in time during the last year, what will we look? Last year's figures at any point of time, the last year's figures. What will be the code for a private company? It's LETU. So loan should be exceeding 100 crore. Okay. Turnover should be minimum 200 crore. LETU, loan exceeding 100 crore. Who can do internal audit? Anyone can do it. CA plus CP, only CA, CS, CMA, BCom graduate, MCom graduate, anyone can do it. Clear? Provided board of directors like them. Who appoints these? The board does. Where does this happen? In a board meeting. It will be through a board resolution. Okay? So this is section 138. I am giving you 2 minutes. Quickly read the screen once. I am turning off my video, but I am staying here. Please take a quick look and read it once more. Could be important for MCQs. Generally, people make mistakes when it comes to loans and deposits. Loan figure is over, meaning exceeding deposits and loan. See, we always look at the data from the last year. Or deposits or loan figure, that's from last year, you have to check at any point. You should check paid up capital turnover for last year on 31st March. Okay, read quickly. Done? Next. What is the scope of internal audit? Now, what does an internal auditor do? The scope of an internal auditor is merge. What is it? What do we look in merge? M for monitoring of internal controls. What does M stand for? Monitoring of internal controls. E is examination of financial operating information. Review of operating activities. R for review of compliance with laws and regulations. R is for risk management. G for governance. The code is what? Merge. Monitoring of internal controls, examination of financial and operating information. R is risk governance. Risk management, review of compliance with laws, regulations, operating activities. G is governance. The scope is merge. There's a question on the review of compliance, which is our TYU2 on page number 456 in the main book, and I have written it down directly. What does this say? So question is, what does this say? CA Deva is internal auditor of listed company. So I got a hint that there's a question on internal audit. Company aims to ensure its requirements set with SEBI requirement, and it's always on the right side of the law. It asks internal auditor to manage compliance, the tracking system, including the processes, directly corresponds with regulator in this matter. The process and scope of internal audit agreed at time of appointment included with compliance with laws and regulation. Can he perform this kind of engagement? We finished reviewing compliance, laws, regulations. So after reading this, what do you see? Like this can be done, right? Understand what was in the scope. Review of compliance, laws, regulations. It is management's duty to compliance law, right? He will review whether it complies or not. Here now correspond directly with the regulators. I hope this is clear. Furthermore, for listed companies, it's SEBI, and in case of internal auditor, you can talk to SEBI about any problems. It's not internal auditor's job. The task of negotiation belongs to management. Can he perform? The answer is no. The answer is no. So there's a slightly different question. Generally, people answer it. Everyone is important. It's compliance of laws. He will review compliance of laws, not comply with the law. Read the answer options. Read it. Done? Right, guys? So my first answer was about scope. It was section 138, applicability of internal audit. Let's move on. My next answer is management functions and the scope of internal audit. Internal auditor performs managerial functions. Managerial functions means the work done by management. He reviews it. Now, what have these people given here? If you open the module and look, there are so many scopes covered. Scope of internal auditor's work also includes reviewing internal control system, procedures, custodianship and safeguarding of assets, compliance with policies, plans, procedures, regulations, relevance and reliability of the information, organizational structure, utilization of resources, accomplishment of goals and objectives. Furthermore, this is the responsibility of management, and auditor reviews management's functions. I hope it's clear. Now, not all of them will be in exam. Only one will come in exam. So, what has come twice in the exam is the organizational structure. It came twice in exam. Another is custodianship, safeguarding of assets. This is important. It will be in the module. Therefore, I will revise these two answers to you. Rest is just RTP. What is it? RTP means read if time permits. Just read it. First is review of custodianship and safeguarding of assets. Next, Maintaining assets, doing valuations, checking for existence, whether it's in company's name or not. All these are work of company. We are going to review and see if all true. What's our job? This will involve verifying the existence of the asset, whether there is asset or not. Internal auditor reviews segregation of duties if it's in place or not. He should review the control system to ensure that the assets are properly valued and accounted for. Moreover, if you studied in Inter, like you verified your answer valuation, existence, R stands for right. You checked valuation, you checked amount. So E stands for existence. What is R? R is right. So what happened here? Duties of internal auditor. You should also review the internal control system for intangible assets. Above is tangible while below it's intangible. When the enterprises use EDP, what does EDP mean? Electronic data processing equipment. Physical and system controls on processing facilities, data storage should also be reviewed. If he is using software, you should check its physical and system controls. What is this? There are 4 points here. For whom? For custodianship and safeguarding of assets. Remember, you won't get direct questions on these. The question in the exam will be like, if you are the internal auditor of a company, then so and so. It may also ask as internal auditor, what will you review? Therefore, write this in answer. First, you would write, is the accounting correct? Review segregation of duties, the existence of the asset, and examine system for internal control. And if electronic data is kept in processing system, you need to check both physical and system controls. Okay? Read this answer. Read. Done? Now. The next answer is review of organizational structure. Reviewing organization structure refers to the company's hierarchy, like manager, senior manager, director, board of directors. Or CEO and CFO, you have to check the hierarchy. Code for this is G-score. Code is G-score for organizational structure. What do we need to check? The G-score. What is G? G. What does G say? First, in G it says auditor should examine. Activities of enterprise are grouped for managerial control, like purchase functions are together. Other things related to sales. Separate things for collection and for compliance, entire grouping is done. Auditor should check grouping pattern. When I say auditor, then I am referring to the internal auditor. Internal auditor should review grouping pattern. What's for S? He should review if segregation of duties is proper or not. It means separation. C is charts. The internal auditor should review the organization chart to find out whether the structure is simple and economical. So you have to check grouping pattern. And then S stands for segregation of duty, C for chart, O for overlapping. C, responsibilities of managerial staff. At headquarters do not overlap with chief executives and operating units. Check if managerial staff is not overlapping responsibilities from chief executives to operating units. Next, review. R is reports. He should examine if there is a unity of command. Each person reports only to one supervisor, so reporting is done. Next, he should evaluate. Next will be, he should evaluate process of managerial development of the enterprise. I hope this is clear to all. Process of managerial development in enterprise. What is the code? It's G score. G is for grouping pattern review, S for segregation of duty, C for organization chart, O is for overlapping, you should check, it should not be overlapping. R is for review. Unity of command means reporting, where each individual reports to only one supervisor. Evaluate process of managerial development in enterprise, it's called G score. Right? Now you can read the G score again. Furthermore, if you don't have your teacher's book, please mark it. I have already marked it for you. Okay guys? Read it. And the G score. Okay? So all the other answers in the RTP, you just need to read them. Now, next is integrity, objectivity, and independence of the internal auditor. So, see, the internal auditor is appointed by the management, right? What happens is that practically internal auditor is, generally it's CA, right? Or even if he is not a CA, regardless of his appointment, he should be independent. Should follow integrity, objectivity should remain. Therefore, it must be less independent, but it should be independent, okay? Because we know that the management has made the appointment. Management should not bully him. The internal auditor should also be independent. Even though he is less independent, he should still be independent. Just read this once. These are 3 points. This is not so important for the exam. Understood? It's easy, right? Next, qualities of an internal auditor. So no need to waste time on it. What is in this? Your qualities. There should be knowledge. Should be smart. Good temperament, team spirit, knowledge of all the acts, an objective approach, good communication skills, and teamwork. Honesty, sincerity. So whatever quality you have inside you, write it down and bring it. It will be the answer. knowledge of accounts, finance, law. You should have tax knowledge. Therefore, basically, this is the quality of an internal auditor. Next, how would you perform internal audit engagement? This is given in module. It's important. Internal audit engagement, what is the code? KPIR. What does K stand for? It's obtaining the knowledge of the business and the environment of the company or client. Then P, performing audit plan. P is audit plan. Then what does I denotes? Gathering the required information. Okay. A stands for performing, B for audit checks, R for reporting of internal audit issues. I hope this code and its full form is clear to all. Headings are important and explain it with details. Okay. Headings are important. There are 5 steps. The code is KPIR. You need to have knowledge of the business and its environment. P is planning, I is gathering the information, A is audit checks, and R is reporting of internal audit issues, KPIR. Okay? Guys, try to explain it in one line in the exam. Okay? Its KPIR stands for performing an internal audit engagement. Obtaining knowledge of the business and its environment. Then plan the audit, gathering the necessary information. Audit check, report on any internal audit issues, KPIR. And explain all these in one line in exam. Next. Now, the internal audit report. The internal audit report. Standards on internal audit is called SIA. It's SIA 370. Okay? Channels on internal audit 370 talks on reporting. Okay? Next. What could be included in exam for content of reporting? Let's see content. So, what am I saying? Let's revisit what we learned in forensics. We have seen this in SRA topics and in TDPS topic. Title, addressee, date, place, time, it's all common. What else to write? Its objective, scope, and approach of the audit assignment. The fact that the internal audit is conducted as per SIA, we see this in SIA. Then this will be executive summary of the key observations, summary of the corrective actions required, and the nature of any assurance that can be derived from these observations. These are contents. Here I have written read A to E on page 449. Which one is A to E? This one here. Okay? It's TDPS plus A to E. It's written in notes. To prepare internal audit report, what should be in mind? Auditor shall issue clear, well-documented internal audit report. What is the content of it? Okay? Title, addressee, date, place, sign plus. Objective, scope, approach of audit assignment. The fact it's conducted as per SIA, summary of key observations and corrective actions taken, nature of assurance, if any, can be derived from observations. Next. Moving ahead, relationship between internal and external auditors. So again, this could be a little important. Internal and external audit both have a relationship. What kind of relationship is it between the two? It's a professional relationship. Okay? When did company appoints internal audit? When section 138 applies. Internal audit report is submitted to statutory auditor. It should be independent, follow objectivity, have integrity. If there is any problem, it should be reported to the statutory auditor, who is like the elder brother. Okay? Because if he reports and he repeatedly informs about the problems, therefore the trust of the statutory auditor will be stronger for the internal auditor. Clear? Whatever points I have marked here, you can read them once. It's a descriptive answer. It becomes rare while it will help during the MCQ questions. Read as much as I have marked. Is it done? Next, distinguish between internal and external audits. Internal audit is applicable when Section 138 is applicable. External audits are applicable to every company. Internal audits can be conducted by internal auditor. External audits can only be done by CA. Internal auditors cover all functions while financial statements are covered by external auditors. He is appointed by the audit committee or the board. He is appointed by the members. Internal auditor's report is used by top management referred by statutory auditor, where here report is used by the stakeholders. So internal audit is not mandatory, but it becomes mandatory. If Section 138 applies here, it's mandatory. Read this. Done? Next. Answer is audit trail. This came in current year's exam. Audit trail. And it is basically an edit log facility. What this means? It states that every company must now use accounting software that has an audit trail feature. Audit trail feature. Any company using accounting software can make any changes they want. But there should be record of those changes in backlog. It means there should be login server at the back of it. And the backlog server should include all the information, including all the changes made by the company. For example, purchases to Mr. A, but the company recorded it in B, then the purchase would be in B. So it went from A to B. There's no problem doing that, but the change you made, let's say, change was on Wednesday the 20th at 8 o'clock at night. You made the change then, right? Hence, there should be log of those changes. What do we call this? An audit trail. It's mandatory from 1st of April 23. Every company should use that accounting software with feature of audit trail. Now, what controls should be in place? Any change to the data including creating new data, updating or deleting must be recorded. If you need to add, update or delete, there's no problem. Okay? It says whenever changes are made, date and time should be recorded. It should include ID of the person. Hence, it should have all the information. Who and when did it happen? What was done? All details should be there. Audit trail may be enabled at accounting software depending on the software's features in such software or may be captured directly in the database underlying such accounting software, meaning it should be in the backlog. What controls should be there? This was asked in the exam. What controls should be there? It's important. Okay? Controls should be in place to ensure audit features can't be disabled or deactivated. Always active. No enable disable feature is inside it. It should always remain active. Controls to ensure that user IDs are assigned to each individual and are not shared. If I have 10 people in the accounting team, then no individual should share his or her ID with others. Controls to ensure any changes to configuration of the system are authorized and are in logs. So if we've made any changes to that software, and that changes must have been approved by someone, and such changes must be maintained. Logs of such changes should be maintained. Controls to ensure access to audit trail. And the backup is accessible, like 10 people who are in the accounting team, they should not have access to the server's backup system. They cannot access servers of logs. Only CEO and CFO should have access. It should be restricted. And access logs wherever the audit trail has been maintained. Whenever anyone has looked in the backlog, like in the system, that should also have access to them and it should be in logs. That CEO arrived on this date. It was on Monday. Around 12 noon, he checked to see who had made what changes in the backlog. Clear? Control to ensure periodic backups of audit trails are taken and archived as per the statutory period under the provisions of the Act. Understood? It's 8 years because generally it's maintained for 8 years. It's important question. Please read it. What control system can return because it is new? This will definitely come in exam. Very sorry guys, it was on mute again. Furthermore, I was saying that I hope you understood. It's very easy content. We finished it in half an hour. That's all you have to do. The answer for KPR, answer for KPR. TYU 1, 2, 3. TYU 1, 2, 3 is important. All three answers. Then comes the controls. It's also important. Audit trail section 138 are important. And do practice questions from question bank. 9, 10, 11, 12, 13, 14. This is important. All these are new questions of module from 9, 10, 11, 12, 13, 14. 15 also. This is important. Okay? 9 to 15 and 7. All questions from question bank are important. Please study it well. Okay? With this, internal audit is done. See you in next class. Goodbye guys. Take care and enjoy. Aim for a rank or 70 plus. If you liked the video, please comment and share it with your friends. Now next comes our SA 580. This is a return representation. Return representation. What is the definition of return representation? It is a return statement given by the management. Return statement given by management. To whom does the management give? To auditor. But for what? To confirm certain matters or to support other audit evidence. He will write that he is telling the truth. He is not saying anything other than the truth. He will write it down on a paper and that paper is called return representation. It does not include the FS or the assertion or supporting books or records. That is his confirmation. It doesn't include the FS. The FS is separate. The books are separate from what we requested. The assertion and the records are separate. He will write it separately and give. And what is the objective of SA 580? Its objective is to use the same name to obtain WR from the management or the TCWC. To support other audit evidence, relevant FS or specific assertion. Whatever assumption are, we will go through those. We will ask for evidence. See third point, to respond appropriately to the WR provided by the management or TCWC. To respond appropriately to WR provided by management or TCWG. Okay. Now, the WR are requested to whom? And tell me guys, from whom the WR is requested? Written representations are requested from management with appropriate authority and responsibility from the FS. and knowledge of the matters. Concern from those who know about things, those who have knowledge, we will ask from them only. Okay? We will ask those who already know, right? Who else would we ask? You tell me. Who else to ask? Can't ask from those without knowledge. Ask only from those with knowledge. Okay. Right? Next, what are the main written representations? One second. What are main written representations? Let's see. The management has fulfilled its responsibility. Which responsibility? To prepare the AFS as per the applicable FRF. FRF stands for Financial Reporting Framework. Now you have given us all the information and all the access, right? And all the transactions are recorded and reflected in the FS. I hope this is clear to all of you. Okay? Auditor should ask management to provide WR that management has fulfilled its responsibility for preparing the FS as per the applicable FRF. And the auditor should ask the management to provide WR stating that management has provided all the necessary information and access to auditor as per the terms of the engagement, and all transactions should be recorded and reflected in the FS. Clear? Hence this is meant WR. What are other WR? We call them plats. What do we call them? Plats. Okay? Any plans or intentions that may affect the carrying value or classification of assets or liabilities. Then any liabilities, both actual and contingent, along with all the other WR. Are there any aspects of law, regulations, contracts, or agreements that could potentially impact the FS? Next is titles give you control over the assets, such as we have taken agreement or property papers. We need to determine if selection and application of accounting policies are appropriate or not. This is other WR. It can be 4-mark questions in exam. What are main and other WR is? Both are important. Furthermore, there may be question in MCQ about identification of main WR and WR. Question number 6. Explain provision regarding the date and period of WR. The date of WR. The date of written representations should be as close as practicable to but not after, and not after means it should be before the date of the auditor's report on the FS. WR should be for all FS periods referred to in auditor's report. If I have comparative, I will take WR in case of comparatives. If I have taken data for 2 years, we will take both years. Let's see the third point. In certain circumstances, the auditor may opt in WR along with the codes of audit in such a case. Updated WR is required near the end of the audit. I had taken it initially and it's been going on. Obviously, it's known that the company's assertions have changed. What will I ask the company? For an updated WR. Okay. To ensure that the subsequent events are also covered in the WR opt-in. Then if there's a change in management, this is an important point. This has come in MCQ and in descriptive part of exam. If there is change in management during period, the present management is still responsible for providing written representations for entire period covered by the audit. This means the new management will provide it for the whole year. If there is change in management during audit period, present management is responsible for giving WR for entire period under audit. For entire year, it is representation letter addressed to auditor. To the CA firm ABC will be addressed. If law or regulation wants management to make public statement on responsibilities, they will not provide WR separately. If management has already made public notice or held press conference to address responsibilities, they are not required to provide separate WR. It will be 4-5 mark question on provision date and period of WR. Then question 7. WR or audit evidence. Explain. WR are necessary information that the auditor requires in connection with the audit of the entity's FS. Similar to responses to inquiries, WR are audit evidence. That will be audit evidence, but it won't be SAAE. WR are audit evidence, but they are not SAAE. They are not sufficient appropriate audit evidence. Although WR offer necessary audit evidence, they do not provide SAAE on their own about any matters with which they deal. This means it's audit evidence, but not SAAE. We have to work for it. The management will provide the documents and that's fine. It is understood. But you have to check. WR are source of audit evidence if management modifies. WR are important source of audit evidence. If management modifies or does not provide WR, it can alert auditor that there is something wrong. If one or more significant issues may exist, and if it appears as though management is requesting something, or he changed what was requested, there's something wrong. Request for return rather than oral representation in many situations prompt management to deal issues rigorously. It means you ask for confirmation on phone call. Nobody pays much attention, they just say okay, but you have to ask him to write it down and give it to you. Therefore, it may prompt the management to consider such matters more carefully, or say more rigorously, thereby enhancing the quality of representations. Okay? Next. This is important question. What audit procedure should we follow if management doesn't provide WR or auditor has doubt on reliability of WR? If auditor has doubts on reliability or WR is not provided, then what will happen? If auditor has doubts about the reliability. If auditor has concerns about the dice, it means diligence, integrity, competence, and ethical values. Diligence, integrity, competence, ethical values. If the auditor has concerns about the dice. Okay? Right? Moreover, it won't give. He should determine the effect on the reliability of the representation obtained and on the audit evidence in general. Determine effect on reliability of representation obtained on audit evidence in general. They haven't give it. They didn't give it. I had a doubt about what was above. I had doubts about the principles and standards. They did not give it to me. If the management does not provide the requested WR, the auditor shall do DRT. What comes in DRT? Discuss matter with management and R. Re-evaluate integrity of management. Discuss with management. Re-evaluate integrity of management. Take appropriate action including modifying the opinion. Where do we write modification part? We will write the modification part in SA 705. What will you say next? Auditor shall disclaim opinion. As per SA 705. Now, if I have any doubts about their diligence, integrity, competence, and authority, I would issue disclaimer of opinion. This is a very important MCQ point. And what we will give? A disclaimer. But why? Because they did not give it properly. What are they doing? They are stealing, they are lying while I am following my principles and ideals and my code of ethics. Right? We have learned ethics. What will we do? We will issue disclaimer. What we will do? Issue disclaimer, okay? Therefore, the list of important questions includes number 8, 6, the objective question and the main WR question. Okay, read it quickly. Read. Moving ahead, next is SA 570, again very important and lengthy. SA 570 talks about going concern. Going concern is one of the most important fundamental accounting assumptions. Company continues its operation for foreseeable future. We look at future. GC is going concern means future. If management has asserted GC assumption for less than 12 months, you will request management that please check for 12 months, I mean in the future for 12 months. See if you can do business or not. 12 months will be your MCQ. Now, in evaluating management's assessment, auditor should consider whether management has considered all information of which the auditor is aware. For example, sometimes the management evaluates it on 31st March and do it on 4th April. And a fire broke out at the factory, or maybe something bad happened outside. In management's assessment, auditor shall consider whether management has considered all information of which auditor is aware. He knows that fire broke out. He wants to know whether management has considered this or not. First question, what are the objectives of SA 570? What will you say now? To obtain SI. About the appropriateness of management use of GC assumption. To obtain SAE. About the appropriateness of the management's use of GC assumption. Management evaluated GC. And we need to check the evaluation. So to obtain SI. Second point is to conclude based on audit evidence whether MUC exists. MUC means material uncertainty exists. That cast, the one I marked with green line is repetitive. That cast doubt about on entity's ability to continue as GC. That cast doubt on entity's ability to continue as GC as per SA 570. To report as per SA 570. What is the management's responsibility? What is the responsibility of the auditor? What is management's responsibility? To assess entity's ability to continue as GC even if FRR isn't there. You have to check. And what is our duty here? What should we do? We need to check this point given here. To obtain say about appropriateness of management's use of the GC assumption. Okay, then number 2, to conclude based on evidence whether MUC exists that casts doubt on entity's ability to continue as GC. Third, the auditor's assessment cannot be viewed as a guarantee for the entity's ability to continue as GC. So we don't know whether your life will go on or not. We are not fortune tellers. Have you seen the future? We will check and see what you have seen. We will check what you saw. This is your responsibility of the management and the auditor. For writing hot favorite lines. Next. This question comes in intermediate level and in MCQs. It's for identifying what are conditions that cast doubt on entity's ability to continue as GC. We will study it directly. This was our code. FO, financials, operating and others. Financial means things related to money. Operating means things related to work. Others means the government changed. The government changed some laws. Okay? The government changed laws. But I respect the government. I respect the government. There was some change in law or the non-compliance of the law. So this is FO. In the MCQ, you can find something like this. They will give you an example and ask you to tell whether it is financial, operating or it's other. Or they will give you a financial and they will give you 4 options. 3 will be financial. 1 will be different. You have to tell which one is odd one out. Read from here directly. Clear? Now explain the risk assessment procedure and for evaluating GC. So the auditor should consider whether there are any events or conditions that cast doubt on the entity's ability to continue as GC. Is there any event like that? Let's take example when COVID came, life was over. What happened to Adani? Hindenburg tweeted about Adani's financials. Right, was there any such event? In doing so, the auditor needs to determine if management has performed the preliminary assessment of entity's ability to continue as GC. Check if management has evaluated GC. If such assessment is performed, the auditors should discuss this with management and determine whether the management has identified any events or conditions that cast doubt on the entity's ability to continue as GC. It's same here. And if it's not done, you had to check the GC. But you did not check it. We will discuss with management the basis for intended use of GC in the FS. That means you are following GC because look, if we're following the GC, we don't write in FS that we are following because that's fundamental accounting assumption. We write when GC is not being followed. I checked the FS and saw that the GC was not mentioned. So my assumption is that it's being followed. So you are saying that you are following the GC without checking it. What is the basis on which you can say that you are following the GC? How can you say that you are following it? Tell me. If non-performance, discuss with management on basis for intended use of GC in the FS. Then the auditor should remain alert throughout the audit. Next, there's TYU number 3 and question number 3 is from TYU module, number 3 on back of module. Okay. So keep in mind, this is very important. What are the audit procedures in case of MUC? First one is same as question 4.1. Question number 4.1. What is it? Auditor should consider if there are any events or conditions that cast doubt on the entity's ability to continue as GC. Check it. Then evaluate the management's plan. If they have a plan, a budget and forecasts are made. This means going forward, evaluate whether management has prepared cash flow forecast and assess reliability of the underlying data. Next, consider if there are any additional facts and information that have become available since the management made its assessment. Check for any new information. Request WR regarding the plan and the feasibility of their plans. So this question appears twice in the module, making it important. Then, what are some of the examples of audit procedures which, when events or conditions have been identified raising doubt about the entity's ability to continue as GC? We are asking what are some examples of audit procedures. There is a complete list in the module. I have written it down, but you only need to read 4 to 5 points. Do read these points given, okay? You will find few points in the module on page number 7.20 and you read them. Then, reporting, how will it be done? If the GC is appropriate, GC is equal. MUC exists means material uncertainty. And they disclosed that after 6 months, there might be an event which could cause us some difficulties and they mentioned that in writing. Nothing's hidden, everything is correct. Which opinion? Unmodified opinion. Once you have unmodified opinion, you will share same in the GC para. You will see the same in GC para. GC is appropriate. The MUC exists. But tell me it's a hidden matter. It's not disclosed, so it's wrong. If it's hidden, what would you do? You would qualify an adverse. So the GC here is appropriate. The GC is appropriate, it's a big deal. It would be an adverse opinion. What would you give? An adverse opinion. The GC was not assessed. So the GC was not assessed. What can I do? What are the implications? So I can't do anything then. Consider the implications on the report, okay? Then refer to question 3 on page 7.56 because it's important. TYU 3 is important, I told you. Right? Read it quickly. Then next it says subsequent event as a 560. The subsequent events refer to events occurring after the balance sheet date but before the auditor's report date. I hope the definition of the subsequent event is clear. The objective is to obtain SI about subsequent events, whether they are reflected in the FS. Okay. To respond appropriately to the facts that became known to the auditor after the date of the audit report, after date of audit report. Then, what are the procedures for subsequent events? It's very simple. Perform procedures to obtain SI that all events require adjustments or disclosures have been identified. When is the disclosure? I know it. Disclosure occurs during unawareness. Adjusting event occurs when amount is known. What happens in unawareness? It's disclosed in note. What will you do? You don't need to disclose it. You just need to given an audit opinion. So what we will do to perform procedure to obtain SI? All events that require adjustments or disclosures have been identified. How to make list? We will go to SI. It means sufficient and appropriate audit evidence. For purpose of determining entities' procedures, what will the auditor do? Obtain an understanding of the procedure that management applies to identify significant events. And how does the management do this? It's not my job. It's all done by the management. What are we going to say? We are understanding. Okay. So we just need to understand and observe the work done by the management. Clear? You will need to understand the procedure that management applies for identifying a significant event. Number 2. You will inquire with management about any subsequent events that may have affected the FS. And how did this event took place? Tell me. You will read minutes from meeting held after balance sheet date because if subsequent event happened, it must have discussed. Study interim FS because they will have impact since there are items in FS. If auditor identifies any event that requires adjustment, means amount is known, disclosure means amount is unknown. Ensure that management has done. In case of adjustment, they adjusted it. In disclosure, they should have disclosed. Or what do you get from management? You get the WR. From management that all known events are appropriately adjusted or disclosed as applicable. Okay? Next question. What are the specific inquiries to be made from the management regarding the subsequent events? This is the hint. First was the procedure while the second is specific inquiry. Remember it. Okay? Whether any new commitments, borrowings or guarantees are entered into. Now, let's take an example. If you took a loan and that loan was sanctioned on 28th March. Money arrived on the 4th. The money came on 4th but was sanctioned on 28th. That was last year's event. Event happened next year. Financial year was changed. It was subsequent event. Whether sales or acquisitions of assets are occurred or are planned. Whether there is increase in capital or issuance of debt instruments. If loan is taken, then what does that mean? What does bringing public issue mean? They want to continue subsequent event. Whether assets have been appropriately have been approved by government or destroyed. Furthermore, if you have showed your asset on the March of 31st but on the April 4th the government came and destroyed it, then what will happen? It was occupied. Then it's subsequent event whether there have been any developments regarding the contingencies. Whether any unusual accounting treatment adjustments are made. Whether any events occurred that are relevant to the measurement of estimates or provisions made in the FS. So this is A to G. You have to memorize this as it is. First answer was procedure and second specific inquiry. Third, 19 to 29 is my financial year. It's my audit report date. So any event happening during this phase is called what? A subsequent event. Either auditor knew before or after the audit report date, that means after the FS have been released to the market. What would you call the facts that came to the auditor's knowledge before and after the FS were issued? Subsequent events. Before FS is important, something to consider. What is it? Both needs to be read together. Generally, there is no obligation. There is no obligation. It's same as A. However, if I had known on the date of the audit report, it would have changed my audit report opinion. I will discuss matter with management. What should we discuss about this matter? Treatment in the FS, whether there is need to amend FS. Okay. On the other hand, the management says you can amend it. There is no problem for us. We will perform a new procedure and provide a new report. How? You will amend audit report to include additional date restricted to the amendment. Please add an audit. I have written one. I signed it on 8th July, normal. Then in subsequent event, I signed it on the 28th of July. There are two dates on same balance sheet and same audit report. When there are two dates, what do we call it? Dual dating. Or there is another way. You can just give a new audit report and just add UM. Why would we add UM first? Because FS is given. If adjustment or disclosure is done, it would have come in FS. Therefore, guys, either you do dual dating or UM para. If it does not amend the FS, and if it's not given to entity, management says they will not do it. Management hasn't given audit report. It's with them. What to do? Modify it. If it's provided to entity, what will we do? Notify TCWZ not to issue it to a third party. It was not necessary, still issued. Take action to prevent reliance. What would you say? Take action to prevent reliance. After FS review is issued, answer is same. Then what would you say? Management informed everyone about the situation to everyone that the audit report you have is incorrect. Give it back. We will give you what? A new report. So you give a new report. The management says are the mate that they will send it again. First send it, then ask for it back, send it back. Moreover, what will you do now? Take action to prevent reliance. Take action to prevent reliance. Clear? You will give public notice. Refer to TYU 12, page 7.13 and question number 5 on page 7.75. These are model questions that you will do yourself. Let's start. Let's quickly start this. Look, here, how many schedules do I have? We follow the Chartered Accountants Act 1949. Just a disclaimer, I am not teaching you right now. This is a revision part for ethics. Students appearing in December 21, May, November 22. It's a quick recap. For detailed lectures, please contact the website or the number displayed on the screen. So, we have 2 schedules. And I am writing now that this is the first schedule. Then we have the second schedule. So, first schedule, second schedule. In the first schedule, we are looking at part 1, part 2, part 3, part 4. Part 1, 2, 3, 4. Part 1, part 2, part 3, part 4. Is this visible to all? Part 1, part 2, part 3, part 1, part 2, part 3. Okay? It is applicable to practice. Okay? Practice. Service, no service. General, general. Others and others. The first part applies to CA in practice, the CA in practice. Here, CA in service, while there is nothing left on other side. This refers to CA in general. This practice in service is applicable to everyone, while on other side, general meaning applicable to all. Others means other misconduct. Remember, many make mistake in this part. If the questions in the exam are based on this concept, then you will write guilty of professional misconduct. You will talk about guilty of other and professional misconduct. If question comes on this, write guilty of other misconduct. Okay? Guilty of other misconduct. Whereas this is guilty of professional misconduct, below is guilty of other misconduct. How to remember number of clauses? This will be first 1, then 2, and then 3. Did you see what I did? 2 will be above and 2 below. 2 above, 2 below. The total is 19. The total is 19. Look carefully. How much is 12 minus 2? 12 minus 2. It's 10. 10. 4 and 1. So remember, 10, 4, 1, total 15. Grand total is 34. The grand total is 34. Guys, the more you will write or scribble on this paper, the more you will be good at this, because the whole chapter is about clause, parts, schedule. Say again, clause, parts, schedule. If your clause, parts, schedule, anything is wrong, you will get 0. I wish you get 4 out of 4, but our target is to get 3.5. When I think of 3.5, we should get 3.5. Right? So guys, there are 2 schedules, first schedule and second schedule. First schedule has parts 1, 2, 3, 4, 1, 2, 3. Now, it goes like this: practice and practice, service and no service, general and general, others and others. 1, 2, 3. And 2 above and 2 down, total is 19. Grand total 34. Balancing figure 15. The balancing figure is 15. 12 minus 2 is 10. 10, 4, 1, 10, 4, 1. Let's quickly go through it. You will get hold of it. We have 2 schedules. First schedule, second schedule. Part 1 and part 2. Part 3, part 4. Here part 1, part 2, part 3. I will write below. Part 2, part 3. Okay? This will be practice and practice, then service, no service, then general and general, then others, others. Part 1, 2, 3. Okay? 2 above and 2 down. The total is 19. Hence, grand total is 34. Balance is 15. 10, 4, 1. 10, 4, 1. Okay? Understood? Right? Now guys, you can take photo of this, but take it later. Someone is saying that make PDF of this. I don't know how to make PDF of this. There is an app. Please take picture of this and place it on your desk or on notice board. Paste it somewhere. It will be useful for revision. First schedule has 4 parts. See first part. Part 1 applies to those in practice. How do you start the line? A chartered accountant in practice will be considered guilty of the professional misconduct if he or she allows another person to practice in his or her name. Whereas what is the exception here? A partner or an employee and in practice. Number 2. This will be same. A CA in practice will be guilty of professional misconduct if he or she pays, allows to pay or agrees to pay any BCS. What is the meaning? Brokerage, commission and share. Brokerage, commission, share a profit. Double of 2 will be 4. Double of 2 will be 4 and 4 is exception. CA in practice and partner. My brother. My real brother. My retired brother, retired partner. My dead brother, deceased partner's legal representative. My CS CMA sisters. Professional members with prescribed qualifications. There are 5 members of professional body with prescribed qualifications. There are 8 in prescribed qualification. 5 and 8. How do you remember 244? 4 is exception. My real brother means a practicing CA or my partner. My retired brother, legal representative of deceased partner means dead brother. Give to my CS CMA sister. Third, if pay is not allowed, why accept is allowed? Accept or agree to accept. It's allowed to take from those who have given means exceptions mentioned above will come below. Now clause 4. Clause 4. First name, pays and accept. Name. Then pays and accepts partnership, while partnership means partnership. Clause 4 and 4 exceptions. Furthermore, if he enters into partnership, whether in India or outside, then exception is 4, but with whom? With CA in practice. It can be with professional body members' prescribed qualifications. It could also be with resident outside of India. And the CG and the council, the ones who permit. You cannot partner with CPA persons. You cannot partner with CPA persons. Clear? And it's clause 4 with 4 exceptions. Okay? Right? The name, pays and accept partnership, it's 5. Furthermore, you should keep one thing in mind, that it secures professional work. Secures professional work. Okay? To any person other than partner. And employee and means who is allowed means who is allowed. Or I mean which is allowed. Is it clear? Therefore, you can get it through a partner or through an employee or any other means that are allowed which are mentioned in clause 6. No problem. On the other hand, if you told your article or your friend to get you work, you told them to get you some work, you are GP. Let's go with the sound. Clause 6. Solicit. Clause 6. Solicit. 6. Solicit. Go with the sound. Soliciting professional work through CAPIA. And it means circular advertisement, personal communication, interview, any other. Circular advertisement, personal communication, interview, any other. The advertisement is above and it's below as well, but it's in 7. 7 is advertisement. So, if it comes on circular, personal communication, interview or any other, you will write 6. Therefore, if you see advertisement word anywhere, such as on neon signboards, on pen, pencil or on files, on website or anywhere, then you have to write 7. 7 and 6 both. Because advertisement will be in both 6 and 7. You have to write both in exam. Moreover, go with the sound 8, communicate 8, communicate 8, communicate. You have to communicate with previous auditor. If previous auditor was CA, if that person with similar position was held by a chartered accountant. Whereas the internal audit was held by the BCom person, but if it wasn't, it's fine. It's a healthy practice to communicate, right? How to communicate? Either by hand. That means by registered post acknowledgement due. Email is added to electronic port and UDIN. You don't know procedure for UDIN. It hasn't come yet. We have added UDIN. Communicate through UDIN. What are the guidelines? It hasn't come yet. Remember it in amendment. 9. Go with spelling. ASCERTAIN. It's called as certain. Chartered accountant shall be deemed to be guilty of professional misconduct if he accepts any position as an auditor without a certaining provision from 139 to 142. OR needs to be passed for appointment, but it was not. There was casual vacancy. Instead of board, the member appointed it. But person did not accept the position. Person in front did not accept it. Moreover, there was casual vacancy. The board appointed someone. They were wrong because we are not appointed by the board. We are appointed by members through ORAGM. From 139 to 142, now 10th. Furthermore, now on 10th part, there is percent of profit, then again percent of profit, okay? As per regulation of 192. They say, you can't charge fees on percentage profit, you are GPM. But there are 3 old exceptions in regulation 192. Value of direct taxes, liquidator, corporate society, then 5 new came. Where we say the debt recovery service of cost optimization. Then there are 5 more and 2 new have been added. One is the IBC. If you are an insolvency professional, then it's fine because it is the same as a liquidator, okay? And one more, which is a new non-audit services. Non-assurance services to non-audit clients. Non-assurance to non-audit clients. This A means amendment. This is 3 plus 5 plus 2, total of 10. 3 are old, 5 and 2 more were amended. 11th. 1 and 2 business. 2 business. This is about director, MD. They have 2 businesses. So in clause 11, it's about GPM. There you have to talk about regulation 190A and you need prior and specific permission. Okay. 12 is signing. 12 is signing. Most important thing is this. This entire part, is that clear? Therefore, guys, you need to focus here and see my actions. If you will see my actions, then you will remember the chapter well. I hope this point is clear. Action is needed because whole chapter depends on this. The name. Given to partner or employer, it will work. Pays allows CA to pay brokerage, commission or share profits to 4 people. And that includes a retired and dead brother, also sister. Third, accept, take from those who have given. Then fourth is doing partnership. Clause 4 and 4 exception. Practicing CA professional prescribed qualifications non-Indian. Fourth, CG Council. 5, secures professional work. Except partner employs any means allowed. Then 6th point is solicit, that is CAPIA, others. Then 7th, advertising. 8, communicate. How to do it? Hand, electronic mode or through UDIN. 9th, ASCER TAIR, it's 9 letters. Check compliance of sections 139 to 142. Now see 10th, goal profit percentage. Regulation 1923 plus 5 plus 2, 2 amendments and see the new one. Next is 11th, 2 business. Furthermore, we started partnership or we started some other new business. Okay. Let's say you teach 25 hours, maximum 25 hours per week. Is that correct? So you are in that. You will be included in clause 11. Now 12th, if I asked my article to sign, it won't work. If I asked my partner, it's fine. Article can sign routine documents, no problem. But during inquiry and later, article would not be held responsible, but CA will. Now, a quick recap of the clauses. In part 2, there are only 2 clauses. Who are they applicable to? CA in service. 2 and 3 will become 1 and 2 here. Pays, share of profits. A CA member of the institute in service. A CA who is not in practice shall be deemed guilty of professional misconduct if he agrees to pay any share of his earnings to another party, if paid GPM. Vice versa. And if he accepts any fees, profits or any gains from ABC2L. ABC2L, and this means agent, broker, customer, chartered accountant, lawyer. You accept fees, profits and gains from agent, broker, customer, chartered accountant or lawyer, ABCL of CFP, company firm person. Now imagine you are working there and your brother or a friend is CA in practice. He said, get me a job or get me an internship. You say, I will keep your account, right? But it's wrong. It's his earnings. You are a GPM. Pays accepts, pays accepts. Clause 3, there are 3 things. Clause 3, 3 things. Now first, not a fellow, act as a fellow. It's made in 5 years. ACO in first 5 years, FC in next 5 years. Not acting as a fellow. Second, does not supply the information, does not comply with requirement. Neither inform nor comply with requirements of ABCD2IQ. Who is applicable? Member of institute in practice or not shall be deemed guilty of professional misconduct if he does not provide necessary information, does not comply with requirements of ABCD2IQ. Upright authority, disciplinary board, ethics committee, director of discipline, disciplinary committee, IC institute and the quality review board. Clause 3, 366, we have provided false information of clause 6 and 7. Clause 6 and 7 means website was created, which is allowed in clause 6, but we provided false information. But my boss is smart. Okay guys, it's false information of clause 6, 7. Part 4, other misconduct, guilty of other misconduct. Keep in mind, do not make mistakes. Right? A member of institute in practice or not is guilty of other misconduct if held responsible under civil or criminal court. Offenses not exceeding 6 months. Offenses exceeding imprisonment not exceeding 6 months up to 6 months. Clause 2 concerns disrepute to profession or institute, despite of its relation to professional's work. Disrepute to profession or institute, whether or not related to his professional work. This is over. We are going very quickly, guys. This is not a regular lecture. It's just a quick recap. For those who have already studied it, they already know this. If you listen to it often, it will be drilled in your brain. Okay? Take photo of this. Take it. Okay? Done? Second schedule. It has 3 parts. First part is for practice. CA in practice shall be deemed to be guilty of professional misconduct if confidential information is disclosed, according to course of his engagement except as permitted by client and law. If client and law permits, then it's fine, otherwise you are GPA. 2 certified FS unless examined by 4 people. 2 times 4, 2 times 4, 2 times 4, and these are same rules. What we studied first, we have to apply. CA in practice is considered guilty of professional misconduct if he certified FS. Certified FS unless examined by 4 people. Himself, partner, employee. Himself, partner, employee, another CA in practice, another CA in practice. Then 3, when he vouches for accuracy of forecasts. It's allowed to make forecasts, but if you are vouching for accuracy, you are GPA. Forecasts are allowed, but if you are vouching for accuracy, then you are GPA. Clause 4. When he expresses opinion where he, his firm, partner, relative or substantial interest. 4 exceptions were there as well. Expresses opinion on FS, where he, his firm, partner or relative have substantial interest. FAILS, 5 letters, where he fails to disclose FACTS, facts, where he fails to disclose facts. Facts. Fails to disclose facts, which is known to him. He knew about it, yet he didn't disclose. Failure to disclose facts. Failure to disclose facts. GPM. The next point, when he fails to report misstatements. What's in 5? An important thing. You know about it, but it is not given in the FS. It is not in FS. Okay. In 6, it's given in 6th, but it is wrong. It's given wrong. It's not given in 5, it's given in 6, but it was not correct. Now, let's see 7. 7th is easy. Grossly negligence, due diligence. Grossly negligence, did not exercise due diligence. 8th clause, it was 8 communicate, but here it's 8 negate. Fails to obtain evidence or to support opinion, fails to obtain evidence to support opinion. His exceptions are material to negate the expression of an opinion, 8 negate, 8 negate. Fails to obtain evidence to support opinion, or his exceptions are material to negate expression of opinion. You don't have any evidence to prove your opinion. No evidence. Okay, now if you check your opinion in detail with sample, it's changed. Does his exceptions provide evidence to counter opinion? No. Now the next point is 9. It's a 9-letter word. DEPARTURE, it's departure with 9 letters. Fails to draw attention to departure from generally accepted auditing procedures. GAP stands for generally accepted audit procedures. Next. The next point is 10th, and the 10th point tells about money, 5-letter word. Money, it's very common word. You hear this word many times. Fails to keep money in separate bank account. What are the exceptions? Fees or remuneration. Okay. What does part 2 says? Contingent provisions of the Act, regulations, guidelines of the Council, because this is applicable to whom? All members of institute, whether in practice or not, will be guilty of professional misconduct if he contravene provisions of the Act or regulations and the guidelines of the Council. They have explained about taxes. Case of 10,000 is mentioned here. Everything is given in this. It's a big clause. Read it. Disclose confidential information in employee's capacity. It disclose confidential information except as permitted by the employer in law. I am practicing CA working for Reliance. If I disclosed something, so I will become GPM 112. Clause 1 part 1 second schedule. Okay. What if a CA working with me discloses information? Then what will happen? I mean, I took him for audit with me. I am going to sign audit report. Employee CA discloses it. So that will be GPM 222. GPM 222. I hope this point is clear. Now assume Rahul is working with Reliance as CA and he discloses information. Then what will happen? Tell me. He will be GPM 222, right? It's applicable to all for CA and employee. Discloses information in employee capacity except employer or law. Next. If included in any IFRS information form, return statement, information form, return statement. Includes information from written in particular or knowing it to be false, submitted to ABCD to IQ. Such as affiliated authority, board of discipline, council or its committee, director of discipline, and so on. You did not give it. What if you did not give? If you did not give, then where will you be GPM? You will be GPM here. See this. It's 231. If you did not give, then 231. You did not give to ABC to IQ. Insurance inquires about it. You did not answer it. Then insurance went to 231. 231 clause 2 part 3 first schedule. If you gave 10 articles but inform only about 4, you gave but it were wrong, then what? You gave it but were wrong. 3. 2. You gave it incorrectly. 322. 4. If you defalcates or embezzles money in professional capacity. This means you have burned the cash on amusement purpose then. You are gambling and spending money on your amusement. It's defaults, embezzlements and money misappropriation in professional capacity. Part 3. Imprisonment for over 6 months. Less than or equal to 6 months. There, it's given over or equal to 6 months. It's completed. We were able to revise. Take the photo. I think in around 18-17 minutes. Right? Let me tell you that whenever you travel by train or anywhere else, if you want a quick recap, then listen to this. It will be in your mind. These are my shortcuts. It's not detailed lecture. It will be separate. This is just quick recap or revision. Keep practicing.